We had this conversation with Vince Clerk, which we just had. He suspended buybacks, suspended guidance. It was a brutal drop in the stock price as well, as is expected off those Red Sea tensions. Do you recoup the move coming off of this kind of brighter demand picture, this brighter demand story, and really kind of saying that these Red Sea tensions, they're here, they still exist, but perhaps not going to be as much of a weight as previously.
And they flatter the business, to your point, in terms of the demand story. And then in answer to my question about pricing and contract negotiations, they flatter there as well.
Absolutely. How long does it continue for is probably the most important determinant here. 20 seconds to go. Keep an eye on the banking sector as well. Standard Chartered looks like it's had a good time in wealth management. That's going to probably boost its share price this morning. We've already seen that in Hong Kong. ING sounding really quite positive as well. So buyback, Credit's excited about the buybacks. Buybacks are a big feature of the landscape once again. So here we go. European markets are opening. A lot to price in. We are anticipating that the FTSE 100 gets a little bit of a pop. We'll wait for that to come through. It's starting to turn a little bit more green. But we're also sort of going into May. And I wonder whether there's some jitters around that as well. But at the moment, I think probably everybody's focused on the bottom-up story. What is happening with the single stocks? We're beginning to climb a little bit in London. What does the early action look like?
In terms of that early action, just a little bit of upside then for the London market, as you suggest. Obviously, a lot of markets were closed yesterday in Europe and elsewhere, so that'll add to the divergence between London and the rest today. In terms of those energy names, then, looking to see if we get movement, it looks as if we're a little
Shell
bit lower.
coming in very hot. Right at the beginning of the session, index move here, one of your biggest top performers, higher by 1.5%. So that's moving the docket, but it's kind of it's a lone wolf there, because you look at some of the other energy names, they are all in the red. So to your point, from a sector perspective, not correct. Which I wonder if is kind of a bit of a macro read-through as well. You are seeing some of the banking names higher, though, as well. HSBC is your second biggest index contributor to the FTSE, coming right after Shell. So is the London Stock Exchange. So there's some interesting kind of financial names in play here in terms of your best performers this morning.
Vestas is a little soft. We're going to talk to the CEO tomorrow. Looking forward to that. But that stock certainly looks very soft. Novo is understandably the biggest kind of points gain, but ING's in there as well. HSBC looks like it's up as well. I wonder whether that's... So the Hong Kong session really stands out to me this morning. It was very, very strong, and it looks like you're getting some divergence between the Hong Kong market and other major markets around the world, which I think is worth paying attention to. And HSBC may be a beneficiary of that this morning, plus also what Standard Chartered had to say this morning too. Luxury is popping higher. Pandora's up quite strongly. It's had some very strong numbers as well this morning. But weakness in energy. Even Shell is now down by 0.5%. So despite the news they've delivered this morning, that stock is weakening in line with the rest of the sector. Now, the rest of the sector is down by much more, but it is still down.
Yeah, actually, the London listing of Shell looks a little stronger, so we'll dig into the details there. But AP Møller-Mærsk in focus as well. That stock down by 1.5% this morning, and we've, of course, spoken to the CEO earlier on. We talked about what he had to say about global container rates and about the Red Sea and the extent to which that all persists. The impact from the Red Sea conflict will last most of 2024, and he said that certainly into the second half of this year, that was his expectation, that's where you'd see the impact. And Maersk raising the lower end of their profit forecast range. That not having a positive impact on the stock, though. That went down by 2.5% this morning.
You're right about Shell. Looks like it's the other listings that are moving that story down, but the rest of the sector is soft. But yeah, no, Shell in London is currently higher by 1.33%. I apologise for the error. Where does this take us net-net? I think it's really hard to kind of pull some stories out of this that give us a clear sense of direction. What is the read across here? The financials actually sound quite positive, so that's a fairly solid foundation for the market. Elsewhere, I think it's a more murky picture. I think the Maersk story is difficult to navigate, to excuse the pun, in terms of what actually it tells us. I think there's a lot of geopolitics folded into that story. And the oil story, I think, is all over the place. I think it's really hard to get a handle on what is happening with the oil sector right now, with this kind of Saudi story hanging over us. We potentially could see a deal between Saudi, the United States, and Israel. What would that mean for the oil story? So I think that's a difficult one to read.
Is that an overhang? Is the geopolitics still an overhang in this market in terms of kind of if we do get that either normalization talks or do we see that deal, is that then ultimately a positive, or does it really ultimately just come back down to the monetary policy story? Where is the relief rally on the idea that maybe there will not be a hike? At least this is what Chair Powell had to say on the subject. Take a listen.
I do think it's clear that that policy is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that the data will have to answer. I think it's unlikely that the next policy rate move will be a hike.
A little bit more on that. Let's bring in on the markets Kevin Thazet, Portfolio Advisor Investment Committee member at Carmignac. I'm hoping I'm saying all of that right. I apologize, Kevin, if I'm not. Let's get right into the analysis and right into the monetary policy there. In particular, we're talking a lot about this kind of maybe not a hike on the table, but perhaps a cut getting further and further priced out. Is this good news or is this bad news? How are you thinking about it in terms of the tailwind to the equity market?
Well, I think that Mr. Powell last night gave something close to a perfect speech. On the one hand, he maintained credibility, so stating that cuts would likely be pushed further out, and he's postponing the decisions on that front in the wake of still solid economic data, solid or higher than expected inflation data. And on the other hand, he's been pushing back on the hikes, which was a growing concern for markets. So all of this, I think, gives a very favorable backdrop altogether for risk assets and for equities notably.
What would bring that kind of hiccup to the forefront? If the monetary policy is kind of on pause at the moment, which I think is a fair way to look at it, where's the next growth catalyst coming from?
Yeah, well, it could be slower economic data, or not as good economic data. And I think that this would be pretty well digested by financial markets, really, and by risk assets, really. What that is, because in fact, market expectations have adjusted. What is expected for this year on the U.S. monetary policy front, one cut at best. So I think, again, on that front, the job has been done by financial markets in adjusting as per what the Fed might be doing. So should we be getting any kind of signs of a deceleration in economic growth or not as good economic data, then we would likely see kind of increasing pricing of more cuts, which will be well received, I think, by markets as well and by risk assets, even more so given the starting point we are at with, again, a solid economic backdrop.
What if the cuts are not because we've got a solid economic backdrop? It kind of feels like the Fed is waiting for a recession. The idea that the Fed can land this economy softly is becoming more and more difficult to entertain, isn't it?
Yes, I mean, it's always been a tough sell, let's put it this way. We have collectively all been very doubtful as per the possibility of a soft landing in the US. But one has to admit that so far, this is what is actually being planned out, and that's what is unrolling these days. So, here again, I think that let's say the central scenario is more that of, insurance cuts, and those insurance cuts are being postponed for sure. But again, those are not kind of an emergency phase. And so all this is, again, quite favorable for credit, for equities altogether.
Are the earnings strong enough to justify further equity outperformance, do you think?
Well, again, I mean, if I'm looking at what is expected in Europe for this quarter, the earnings have adjusted significantly on the downside. And here again, what is important to be looking at is what's being integrated. And there's, I'd say, I don't know if it's a fair bit of pessimism, but I think there's quite some cautiousness out there. So, if we kind of look at let's say, analysts and investors which have adjusted on the earnings side, the potential for, I'd say, a decent economic vintage for 2024 for the US, but also for Europe, potentially for China as well. All this would mean that the earnings trajectories going forward shouldn't be that bad across the board.
Kevin, are you concerned, or maybe concerned is the wrong word, maybe there are opportunities in it? Are you thinking about how Europe and the US and central banks there, the rates will decline at different paces? I'm quoting here a line from the OECD this morning, flagging that the EU and US central banks rates will decline at different paces. What does that mean to you in your portfolio?
For sure, I'd say strong upward movement we have seen on risk assets for the past 6 months or so was fueled by two strong factors on the top-down basis. One was this synchronized economic recovery or synchronized economic growth for 2024. I think this is still on the cards. And I'd say the second lever was that of a synchronized monetary easing. For sure, with, again, those higher than expected or even reacceleration in some inflation measures in the US, what is likely ahead of us is some form of divergence in monetary policies. So with the Fed, remaining on hold for most of this year, what our take is that they will not move before election, not during election, so this kind of pushes back its potential cuts in December. While the ECB might be cutting rates as soon as June. I think Mrs. Lagarde has been pretty clear on that front. Initially, I don't think it's going to harm too much. Obviously, it puts some form of a cap or a ceiling or floor as per how low European rates can go, because it will feed into the euro dollar, and there's some transmission between the weakness of the euro and inflation for sure.
Okay, and we know about interest rate differentials clearly influencing where the yen is trading right now, Kevin. I notice in your notes you talk about the yen and you talk about in whose interests it is to shore up the yen and not have it weaken further. Would you expect to see other players then in an intervention, not just the Japanese?
Yes, I mean that's it's something we saw in the late 90s with Minister Rubin from the US intervening as well, so as to kind of shore up the yen. Clearly, it could be something that could be happening again.
Kevin, great to catch up. Thanks very much indeed. Kevin Thoze, Portfolio Advisor and Investments Committee member over at Carmignac. Let's take a look at the bigger picture here in Europe. Here are the main stocks that we often follow, the core six. Novo Nordisk, obviously, one of the stories that is standing out this morning. But it's interesting to see the reaction that we are getting in some of these stocks this morning. ASML is down pretty hard. But look at Novo as well. I think this is fascinating. This stock is, as you can see on the screen at the moment, weakening. There are very few of these major stocks that are higher this morning. Schneider is also soft. Nestle is down. There's no kind of obvious sort of growth value narrative that seems to be developing here either. Ferrari is showing signs of weakness as well. So it's interesting how the market is taking some of these stock stories. Maersk is down this morning as well. It gapped higher a few days ago and is now fading that move. Let's work our way through some of the other names that we're watching. I think this is turning into a really interesting kind of granular story developing here in Europe. Joe Easton, over to you.
So we'll start with the banks, guys, because we have got a move in Sabadell over in Madrid, reopening following that holiday, up 7%. We got the details of that merger. It is actually trading well below the implied price, so perhaps some risk of execution on that one. BBVA coming down. It's a merger between sunny Alicante and Bilbao in the north, and it is getting a positive reaction on Sabadell at least, but BBVA is declining. In terms of the other big banks, Stanchart getting a 6% gain, much bigger than the rise we saw in Hong Kong. In fact, they are seeing some strength in the wealth management business, and ING rising following that 2.5 billion euro buyback this morning over in Amsterdam, up 5%, a big gain for that one today. Then in terms of some of those other Danish earnings, it's not just Novo today. We've got a bunch of other firms reporting. There's Novo, though, extending that decline now. It's down 2.5%, obviously a massive gainer over the past few years for the obesity drug maker. And Maersk actually declining. Most of the numbers look pretty positive out of them, but one trader pointing to a line on attributable profit, which is a specific number that they report, and apparently that one is weak, and we are seeing that stock declining 4% in Copenhagen. Vestas, a serial offender over on the Danish exchange. That one declining. That one's down 4% today. Wind turbines are weakening, but Pandora, charm bracelets, we can't get enough of them, can we? And they're also gaining in terms of Pandora stock today. It's up 4% following some strong earnings out of them this morning. A couple of other quick earnings to bring you on the final board. There's Shell, only up 0.6%, had a good run today. Hugo Boss over in Apparel, pretty strong numbers out of them, but not a huge gain. Teleperformance hit hard this year due to worries about AI encroaching on the call center business, but that is rebounding today following results from them. Strong numbers. And Worldline also a serial profit warner, that one gaining. It's in the payment processor space, both of them in France today. London Stock Exchange, meanwhile, gets a gain. They are rebuying $500 million worth of stock from Blackstone, their former investor. Still has a big stake in them. They're rebuying more stock from that one. It's up 1%. It was up around 3% at the open. That one is gaining. In terms of chemicals, finally, we've got Bayer, a positive court ruling out of the German company. That comes from Washington, a court ruling against a almost $200 million ruling around one of their chemicals at the Monsanto business that was said to cause health issues. A court overturns that, and we are seeing a decent gain for Bayer, up 5% over in Frankfurt.
Joe, thanks very much. Joe Easton from our equities team. We're going to dig into what's going on at Novo Nordisk next. It's shipping 4 times more introductory doses of its weight loss drug Wegovy in the United States than at the end of last year. That's not enough, though, to shore up confidence in the story. Down by 2.3% this morning for that Danish listing. We'll discuss those numbers from Europe's most valuable company next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
bit more breaking data to bring you this morning. We have Spanish manufacturing PMI dropping onto the Bloomberg terminal. It comes through at 52.2. That's up from 51.4 and above the 51.4 that economists were anticipating. More evidence, perhaps, of a manufacturing rebound that is occurring. More strong data out of Spain, which will cheer Chrissy up. But it's a slow progress story when it comes to the manufacturing side of things. Talking of manufacturing, let's talk a little bit about Novo Nordisk this morning. So, in theory, it's outperformed its first quarter result expectations. So the Danish pharma giant announcing that it's going to be quadrupling the number of patients starting the weight loss drug Wegovy in the United States, but there looks like some issues around pricing. We've got a stock that is now down. So earlier on, the indications were that it was going to open higher. Now it is down and adding significant weight to the KFX this morning. Ashley Furlong joins us now to give us some sort of assessment of what is going on and to maybe sort of clear this muddled picture up for us. So, simple, why is the stock down?
It's increasingly becoming sort of a supply issue. We've seen with Wegovy the estimates, the sales for Wegovy slightly missed estimates, and I think we're seeing that, you know, everyone's looking, can these drug makers supply enough product to meet this insatiable demand? And the question at the moment is that they can't. And today, Novo Nordisk also said that the demand is expected to continue to outstrip supply for the coming months.
So that's the supply side of things, Ashley, which you rightly point out, and that seems to be an issue for them. They have increased their guidance on profit and sales. So what do we learn today about the long-term potential of these types of drugs?
So they're doing a lot of work to actually increase that supply and a lot of investment into the manufacturing capacity. So this year they plan to spend double what they spent previously in investment in manufacturing capacity. And as we've heard, quadrupled starter doses every week in the US compared to December. 5,000 people starting on Wegovy in December, 20,000 starting now every week in the US. That's quite a significant increase. And they're hoping, obviously, that they can continue to ramp up supply to meet that demand.
Can we talk a little bit about pricing here? Because if there is this demand, this insatiable demand, why are the prices decreasing at a time when the competitor, Eli Lilly, seems to be doing just fine?
We'll be seeing sort of increasing, governments and sort of people who would reimburse these drugs looking at the prices and you know, questions about whether they can continue to actually pay those prices. As we've seen also a reimbursement in the home country as well, you know, questions about whether it'll continue to be reimbursed at the same rates. So I think the drug makers are feeling pressure to lower those prices.
Yeah, certainly in the United States it's becoming quite heated, isn't it? And I noticed in our Big Take story, I did mention yesterday about how they dropped prices in their home market, as you referenced, to try and neutralise some of the politics there. What's the rivalry with Eli Lilly like? Because they seemed a little later to the party, but then people impressed with their numbers. So where do we stand on that?
Exactly, and Eli Lilly's stock has soared just after they posted results earlier this week and also raised their guidance. At the moment, with demand outstripping supply, there's space for them both. You know, there's not enough of these weight loss drugs on the market, and people want them. So there's competition, obviously, but I think in the coming years that's something that's obviously going to be very closely watched to see who comes out top.
Expectation management is really important, and we're in a world, as you say, that we are supply constrained. The market is extrapolating. How difficult is it to extrapolate on what is going on here? It's really interesting. You can compare and contrast NVIDIA and Novo really easily. They're both supply constrained. We don't know ultimately what the potential of these markets could be. We know it's going to be enormous, but the exact nature of the enormous bit is really hard to pick.
Well, as we've seen, Bloomberg Intelligence says $80 billion market annually by 2030. They think that might be conservative now. And there's many other drug makers, you know, sort of knocking on that door with their own obesity drugs, and as well as Eli Lilly and Novo Nordisk coming up with different sort of products, oral products, things that might be more sort of palatable for patients.
Hard to pick. but certainly still looking good, despite the little wobble that we're seeing certainly this morning. Ashley, thank you very much indeed for providing some clarity, Ashley Furlong, on what is happening with Novo Nordisk. Of course, you do not want to miss our interview. The CFO of Novo Nordisk is coming up just after 9 a.m. London time. We are going to be hearing from the company's chief executive a little later on in the day. It's a busy day for Novo Nordisk, and we have definitely got it covered. Plus, we've got other news coming out of the pharma sector as well. Moderna is going to be joining us too. The CEO, Stefan Bancel, is going to be joining the team a little bit later on, 12:30 London time, for that conversation. Listen to Stefan. He has many interesting things to say. So there's lots of great insights coming up on the pharma sector throughout the morning.
Lots on pharma, lots on banks. The earnings don't stop. Let's go to the banks next. Standard Chartered posting first quarter earnings that topped their estimates as after its traders collected a windfall from tumultuous credit and commodity markets. ING, on the other hand, meanwhile, announcing a €2.5 billion share buyback for reporting a first quarter profit that beat estimates. We spoke to the CFO earlier and got his take on the macro and how it influences his business. Take a listen.
Federal Reserve maybe delaying rate cuts. That would have a read across to the ECB decision making. So the market expectation is that June will be the first rate cut. But I think the shape of that rate cut will be more benign than perhaps even the market expect. We believe we can operate profitably and in a structural way when rates are at 4%. And we expect that we can operate quite profitably even if rates comes down to 2.5 to 75.
All right, joining us now, Bloomberg's Tom Metcalf. Tom, we just heard from the ING CEO there. Let's start there. The ING number is interesting. Big buyback, though. Is this just catch-up? Is this a one-off? How are you viewing it?
But ING have been coming out with some big buybacks for a while now. You know, for the size of that bank, as you say, 2.5 billion, not bad. So no surprise shareholders have been reacting well over the past few months to that sort of policy. And I thought his comments there were just, you know, really interesting, really just convey why banks like ING are doing well at the moment. You know, this rate story, the fact rates will stay higher for longer. They're going to be making plenty of profits. And it's interesting to see kind of the range he gave there as well, right down to 2.5%. He's seeing looking pretty comfortable.
So that's the story around that particular business, around ING. What about Standard Chartered then, Tom? We've got a beat there. Wealth management, it seems, a bright spot.
Yeah, very strong beat, actually. I think shares are now up 6-7% in London. And yeah, you had the wealth management. They're bringing in new money, bringing in those wealthy clients that all banks are trying to chase. And of course, the other thing would be the traders. So then the last few quarters, the traders at Standard Chartered, maybe somewhat more unheralded than those at Goldman Sachs, but they're doing a pretty good job and really push those earnings up.
Brutal over at Barclays. Talk me through the job cuts.
Yeah, so this is, you know, we knew they were coming, and they were started yesterday, basically, so several hundred, and this is right across the investment bank.
Yep.
So, you know, it comes back to that very tricky situation that Barclays are in, right? Like, they want to stay as a global investment bank. It's a pretty hard message to be selling when, guess what, you're chopping 300 or so people.
Very quickly, it feels like three different banks, three different stories. Is there a takeaway here that we need to know from this morning's bank deluge?
The takeaway is you've got to watch every single earnings individually.
So basically be a Tom Metcalf.
Just be across it. That's the really interesting thing about European banking, I think, is, you know, we've got an acquisition story in Spain right now with BBVA and Sabadell.
Oh, we are well aware.
Yeah, and it's a completely different story when you swing, you know, that's in Southern Europe. You look at how different it is in Northern Europe. So everything kind of shifts. Obviously, generally a higher rate environment in
Tom, thanks very much. Bloomberg's Tom Metcalf with a host of corporates reporting from the banking space. He's had a busy week. He's joined us a few times, and we're very grateful. Thanks very much, Tom. Coming up on the programme, shelling out. Oil major Shell keeps up the pace of share buybacks as first quarter profit drops less than expected. That was the key question going into these numbers. Would they keep up that pace? And they seem to have answered that with a yes. The stock is moving higher in London, and maybe that's the listing to look at today, given some markets were closed yesterday. We'll be back with analysis. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
This is Markets Today. We're about 30 minutes into the European trading day. Kind of a mixed picture when you look at some of these earnings stories. There's a lot to digest and no real read-through across the board. So let's dive into them. Maersk is catching all of our eyes. I have to start off there. There seems to be a lot of pressure on Danish stocks despite this move and positive numbers, it seems like, from Moller Maersk and from Novo. But let's start with Maersk.
So what I think is interesting is about Maersk this morning is that there was a gap higher on the 25th, which we almost filled now in terms of the move on the downside. So you just think about the kind of the round trip that Maersk has been on over the last few days. We're kind of back to where we started. So it's going to be interesting to see whether this move extends or whether this is simply just a kind of round trip, little expectation coming into the stock, you get a boost, and then you fade that move. But Danish stocks more broadly under pressure, but as Anna's been pointing out, the bulk of the move on the Danish market this morning, and this speaks to the big take yesterday, it's just Novo.
66% of the weighting on the Danish index.
Yeah, and look at all the points this morning.
There's
some softness elsewhere. Vestas is down, Maersk is down a little bit, but to be honest, you can park that because it's all down to basically what we're seeing with Novo.
It doesn't really cut through, does it? I wonder on the Maersk side of things as well. Yes, there was an upgrade to guidance, but there's also this continuing conversation about M&A in the logistics side, and you know that's been the strategy for this business for a long time, to not grow on the sea but to grow on land, and the wider logistics story. I wonder if there's some nervousness around that and what that costs.
Yeah, the DB Schenker story. We asked the CEO about it. You asked the CEO about it, and he said, well, we have nothing new to update. Surprise, surprise.
So that must have been in the market. So he was quite positive about this the other day. Is that new? No, I don't think it is. Do you price that this morning? I don't know.
No, maybe not. Maybe not the thing that moves it, but certainly the weight is downwards this morning, isn't it? What else have we got then? We've talked quite a lot about the banking sector and the earnings coming through there. A bit of M&A to sort of spice up that sector.
Oh, I'm so obsessed with the Spanish banking story. It seems like we're still getting the proper pricing and there's an expectation at least that there will be some sort of return offer from BBVA, and that it'll be some sort of increased offer as well, perhaps lasting at least a couple of weeks.
But does that become dilutive? That's the real challenge here, is that there's quite... How do you make this actually make sense if you are going to boost the price significantly further from here, I think is the question that BBVA would have to answer on this. And how big a cost cuts would you necessarily need to generate in order to justify a higher price, and would that be politically palatable? Even with the deal at the current price, to make it work, you have to deliver quite significant cost cuts.
So
Otherwise it's diluted.
Politically palatable in terms of yes, I don't think the Sanchez government is viewed as very pro-business at the moment. I'm nerding out, bear with me, but I think the prospect of having a Santander-sized or similar to Santander-sized bank coming out of Spain, another one, is quite palatable, at least from an international perspective. So I don't know how that's viewed politically, to be honest.
We'll see how the Spanish government ultimately reacts to this. We'll see how Sabadell works its way through the story. Let's talk about Shell. The stock moving this morning. Strong Q1 beat, lots of buybacks. How sustainable is it? James Heron joins us to discuss. What is the takeaway this morning from these numbers? Is it a belief that this is a business that's firing on all cylinders, that can continue to deliver? What is the sense?
Yeah, I think so. The big change we've seen in the past 12 months is that gas prices, especially in Europe, have dropped a lot. But Shell's gas business is proving pretty resilient. So profits down a bit on year, as expected, but holding up quarter on quarter. And they've kept up the pace of buybacks. It really is a very sort of strong, dependable performance. Investors seem quite pleased. So what they're getting is, dependability after lots of years of ups and downs. COVID was a huge problem for them, and the dividend cut. And now they seem to be back to steady, pretty good returns. So, about positive overall, I think.
Okay, so that's the story around Shell. What links, Shell and Total Energies both being talked about as potentially interested in moving their primary listings to New York. This generates a lot of chatter, this kind of story. And interesting to see the French finance minister out this morning talking to domestic TV in France, saying it's important that Total Energies' primary listing stays in Paris. What do we make of that kind of French intervention?
Yeah, I think it's to be expected. The French have a more interventionist stance when it comes to their companies. The reason Total is talking about this, and Shell also, is this valuation gap they have with their US peers, the Exxon and Chevron trading at much higher valuations. And the perception, at least certainly what Pouyanné said, explaining his rationale, is that because of ESG concerns, European financial institutions just aren't buying into oil companies. But this obstacle doesn't really exist in the US. So they think if they move to the US as a primary listing, they can get a higher valuation, which is what their job is to achieve, really. So.
Yeah, if you were speaking guys' language, the amount of PE and multiples. And big oil that we've been speaking about on this show. Talk to us about the other piece of this business, though. If I remember correctly, Shell actually helped drive the FTSE 100 to a record at the time a couple of months ago because of LNG nat gas revenue.
Yeah.
What's going on in their trading business?
Their trading business is doing pretty well. At the end of last year, they were reporting exceptional earnings because the LNG business now, because since the invasion of Ukraine, the LNG business has been making so much money because they can divert cargoes from lower value markets to high value markets. It's been really driving their profits. That's come off the peak, but they're still doing really well. They have higher volumes because they're producing a bit more, and they've resolved some maintenance issues at some of their plants. So really, the LNG business, which Shell has really invested into and is, I think, one of the biggest companies out there, is looking like a really strong long-term bet, especially as it looks like Russian gas is going to be out of Europe for the foreseeable future.
Oil's at a 7-week low. Inventory data yesterday seemed to be the factor behind the latest move lower. What is happening in terms of the expectation around what demand is looking like at the moment? And kind of how do I think about a range now for crude? Is it 80 to 100? Is it 70 to 90? What am I looking at?
Yeah, that's a tough question. What's really changed, I think, is two things. The de-escalation in the Middle East.
Yep.
When oil looked like it was going towards 100, we had Iran and Israel shooting at each other. Now we've got talk about potentially a ceasefire in Gaza, although there's still a lot of obstacles remain to that. And then also the big shift in sentiment about the outlook for interest rate cuts and the economy has really sort of tamped down expectations of demand. But then what makes it difficult is those two feed into each other, right? Because as oil prices start rising, it makes it look less likely they can cut interest rates. But as they start falling again, the inverse becomes true. So there's a bit of a feedback going on there, and it's kind of hard to see where the equilibrium is. It seems more that it shoots up and then drops down and shoots up again, rather than finding a sustainable level.
Okay, James, thanks very much. So Brent at 84.07, WTI at 79.59 this morning. Both of those up about 0.75% on yesterday's close. James Herron, thank you very much for joining us to talk all things oil this morning. We were referencing the Middle East there, so let's stick with that theme. Bloomberg has learned that the United States and Saudi Arabia are nearing an historic deal that could potentially reshape security in the Middle East. Let's get more on this really important story. Bloomberg's Flavia Kraus-Jackson joins us with the latest here. Flavia, good to have you on the programme. So what do we know about the details of any potential agreement here?
I mean, what we know is that the US and Saudi officials have been discussing the contours of a deal that, of course, many people will sort of remember. There was meant to be a three-way thing with Israel. And what essentially it would involve is that the US would help Saudi Arabia to get defense and some of the weapons that it really wants, and the exchange would be a normalization between Saudi Arabia and Israel. This is something that, of course, before October the 7th was very much desired, and as you recall, also in an interview that Netanyahu gave with Bloomberg News at the time, he felt that the Palestinian issue was a box that had to be ticked so he could have this normalization with Saudi Arabia. Of course, October 7th changed everything, and everything was put on ice. And the main difference now is that what you're looking at is the US and Saudi Arabia essentially looking at a deal, and then it would be put to Netanyahu, who would essentially sort of have, the option to either sort of get in or not. But the main hurdle here, of course, is Palestinian statehood. That is just something that right now Israel can't contemplate. So I think we need a sort of degree of skepticism about the likelihood that this could go through, but the fact that now they're sort of talking about it, and it's been sort of 6 months because this was essentially a taboo subject for a while, is quite interesting.
Flavia, you mentioned that there may still be some hurdles here, that this is something to be watched with kind of a skeptical eye. What does timeline look like then in terms of potentially getting this deal done in terms of developments?
I think right now I think there's a strong sense that this is something that Saudi Arabia really wants and are probably sort of pushing it the most. The timeline we've been given is a couple of weeks, but I think we're sort of sensing a certain degree of hesitation from US officials. And of course, you've got a lot of unknowns, right? Is Israel going to go into Rafah? Will there be a ceasefire deal? All these things are part of the delicate balance and the considerations that, these countries are weighing. And, another big thing, of course, is that as per our story that we've just published, Saudi Arabia is facing, trying to sort of crack down on some dissent in its own country, right? And sort of trying to put a lid on any kind of sort of online protests in terms of sort of criticism of Israel. So they're also sort of trying to control their own sort of, narrative and make sure that, there's a great fear, of course, of protests going back to sort of the Arab Springs, and a lot of countries in the region are sort of concerned that things like that could sort of kick off again.
Flavia, is this a first step to a Saudi-led coalition, a regional coalition that would take control and responsibility for Gaza?
I'm not too sure I would go that far. I think from the Saudi perspective, I think they have really longed to sort of have access to these kind of weapons. And I think they're sort of looking at a timeline of, you've got an election year, and they sort of want to get this done potentially before the uncertainty around the election. And, this is a way to sort of, they're seeing a potential window, and also trying to work out how they could potentially overcome a big obstacle in terms of the Senate, right? Because anything like this would have to go through Senate approval in the US.
Flavia, thanks so much for joining us. Bloomberg's Flavia Kraus-Jackson with the latest on those relationships, crucial as they could be to the developments in the Middle East. Coming up, European data is in focus. We'll be discussing the latest PMI readings. We've had the numbers out of Spain, of course, and what they mean for the ECB's rate path. That conversation next. This is Bloomberg.
announced recently, I believe, is that you're going to do something called the Steve Jobs Archive. And what is that designed to do?
We are trying to honor and elevate individuals through the inspiration of Steve and his life. But I think much more importantly, we are trying to find the best way to communicate to others his ethos and his sense of enormous human possibility so that people can encounter the archive and feel inspired to do something even greater in their own lives, or to stretch what they think is a boundary or something that they didn't contemplate for themselves. So we are still in the collection and development mode. We're building out programs. I think you'll see in the future, you'll see some scholarships and fellowships. You may see some publications, but it's much more about forward-looking and inspiring people to think about how they can be part of positive movement.
This is Bloomberg.
Morning, folks. Welcome back. We've had Spanish PMI data out this morning. The manufacturing side of things looking actually a little better than anticipated. Remember, these are primary readings for Spain. We're about to get Italy data as well, dropping onto our screens, 45, so about 5 seconds to go until we see those numbers. But the data more broadly this week has painted a picture of a European economy, a Eurozone economy that's maybe faring a little bit better than anticipated. As I say that, the Italian data drops, and I say drops, it drops. 47.3 is the number on the manufacturing PMI, the prior 50.4. So a mixed picture maybe emerging on the manufacturing story out of the Euro area this morning. Spanish data better, Italian data not so good. So let's pull it all together. Zoe Schneeweiss joins us to get an ECB perspective on all of this. We saw GDP data earlier on this week. We can fold in some of this data. We're getting fresh data from Spain and Italy this morning. Zoe, where does it leave the picture?
So manufacturing for a while, for the Euro area as a whole, has been quite disappointing. We've had readings below 50, and as a reminder with PMIs, 50 is the line that differentiates between growth and contraction. We've had those readings under 50 for quite a while now in the Euro area. That primarily was due to Germany and France, and that in turn is because of the weak situation in China. Germany and German manufacturing relies so much on exports to China. So if China isn't well, that then feeds through. And again, Germany being such a manufacturing heavyweight plays through the whole Euro area. The Italian data today obviously are quite a disappointment. Last month they had edged back above 50, so we'd seen Italian manufacturing growth again. But now these numbers are bad, and that's just one of those things as a reminder that Europe is very much split with a very weak manufacturing sector, but services still doing really well.
And it also feels like, and I've been harping on the Spanish story all week long, Zoe, only because it is such an anomaly in terms of the broader data. We had the CaixaBank CEO on saying it feels like the Spanish economy is on another continent altogether. Does that matter when it comes to ECB policy or simply overall growth in the region?
So overall growth in the region, you alluded to it already. On Tuesday, we had that bumper reading of 0.3%, so quite a massive rebound from that very shallow recession we had in the Euro area as a whole over the winter. Now, we had an 0.3 reading. In Spain, we had an 0.7 reading. So, yes, Spain is kind of out of this world. Spain obviously had the advantage that while the rest of Europe very much now doesn't rely anymore on Russian gas, Spain is energy independent. So that fielded the economy there. Now, when we look at the ECB, as we all know, a month from now, they'll be doing that first rate cut. That's June 6th. The question now very much shifts to what happens in July. And if the economy is doing quite well, that does mean that there is the danger that a strong economy will again potentially flame inflation. So the hawkish members on the Governing Council who say we don't want back-to-back rate cuts, the strong economic readings will mean that they have some ammunition here to hold against the doves, and those doves come from Italy and Spain, although by the July decision we will have a new Spanish central bank governor.
Right, Zoe, really interesting then, if we end up with a cut in June and we really don't know what happens after that. I mean, there's always a danger that if you start a rate path and you only do one, that it ends up looking like a policy mistake. I suppose that's something the ECB will be very aware of.
They'll be very aware of that. At the same time, they can argue that they maybe only want to cut at meetings where they have economic forecasts. So they have 8 meetings a year, and they only get economic forecasts at every second one. So that's the March, the June, the September, and the December meetings. And that then for them can be the way to explain why they don't want to do back-to-back ones. At the same time, the French central banker and others have said, we shouldn't just be tied to these forecasts. So exciting times ahead for the ECB.
Zoe, you follow the SNB very carefully. We've just seen quite strong inflation data out of Switzerland. Does it start to look as if maybe the SNB has made a little bit of a mistake going early?
Well, you say a strong reading. It's a reading of 1.4%. It went from 1% to 1.4%. That the rest of Europe can dream of numbers that low. And Switzerland, again, has quite a generous inflation forecast. It goes between 0% and 2%. They are within target. So what does mean, and overall, if we look at the SNB's inflation path, they actually said their projection for the second quarter is 1.4%. So quite honestly, that means that if the S&P wants to have an excuse not to cut again in June, they would have one. But on the other hand, if I were betting, I still would think that they would cut in June. Particularly, it'll be 2 weeks after the ECB, and it will put pressure on the franc if they don't follow the ECB.
Okay, Zoe, thanks very much. Thanks for the analysis. Bloomberg Economics editor Zoe Schneeweiss with the latest on the ECB and the SNB this morning. Here's what else we're watching for then in terms of the data that's still ahead. 1:30 UK time, US initial jobless claims. We also get the trade balance data. 3 p.m. UK time, US factory orders and durable goods. And then later we get a lot of US earnings, and we'll linger on this for a moment. We'll get Booking.com, Coinbase, Live Nation. Critty's focused on that one. We'll also get numbers out from Apple. This is going to be a real focus, isn't it? The Apple numbers. We're looking for what happens there.
I'm only fixed on Live Nation because Guy Johnson has tuned my mind to it.
Taylor Swift tickets coming to Europe. I think she's coming to Europe this month, actually.
So I hear.
I know people who have tickets. I am not one of them.
I was expecting it to be my birthday present. Still waiting on that guy. Let's talk about Apple though, because this is a really big one.
Is it?
A big one. I was trying to make a streaming connection, but I can't actually remember what is actually on Apple. Nevertheless, let's talk about the hardware's piece of the equation.
Not that film.
No.
Sorry, to answer your question.
Correct, not that one. I'm going to backtrack here. Apple. The macro story is more interesting to me. I'm curious about how the market takes this, because traditionally when we see these big Apple results, the next day we see it really showing up in NASDAQ 100 pricing, et cetera. It feels like lately that hasn't been the case. Apple hasn't been the macro story that a lot of people watch, despite the fact of that exposure to China, exposure to the earnings story, et cetera. So I don't know, I'm very excited about this one.
But it's a bit like kind of the Fed yesterday. Don't we already know all the news?
Well,
where does the surprise come from?
Well, shall we ask Robert Lee? He might have some new information for us. Robert Lee, Bloomberg Intelligence Senior Analyst. Maybe there'll be a surprise. Maybe we don't know everything about their troubles in China. Robert, what should investors look out for then when it comes to the Apple results?
Okay, do you want to start with the bad news or the good news? What sort of mood are you in
you
today?
Choose.
Okay, well, I guess the story of weakness in the China business is quite well known at the moment, but I'd say the incremental risk is still to the downside because there's a growing sense of, dare I say, even nationalism in the way that Chinese consumers purchase, a Buy China campaign. Not that that's an official slogan or a policy of the government at this point. But having said that, the domestic Chinese handsets are actually really good. Smartphones are a commodity these days, and if you look at the technical performance and the bang for the buck that you get from a local brand like a Huawei, it's really good value for money, and they're excellent products. So in these sort of more cost-conscious times, people are tending to buy more local in China. So that is a challenge for Apple, not just this quarter, but the coming quarters and even into next year. I don't think we'll see a big change on that. Unfortunately for Apple at the moment, their challenge is, where's the big new killer product coming from? We've got the Vision Pro, whatever, but personally, I would argue that is a product for technophiles, people who really like their tech. Is it a mass market product priced at around $3,000 to $3,500 US? It's probably outside the budget of your average consumer, impressive though it might be. So I don't really see that that's going to transform their earnings. The sort of solid part of Apple that should continue to underpin their earnings going forward is obviously services. And if you're captured by the Apple ecosystem, then services remains, relatively robust.
Well, Robert,
Sorry,
when it comes to the downside in particular...
I sense there was a question coming there.
Nope, there is. Just thinking for a second. We already kind of got the numbers, though, didn't we? Counterpoint Research put out numbers. We know kind of just how much damage there is going to be. How much sensitivity could you see to the China commentary? I understand that it's a big part of their business, but don't we already have the numbers around it?
Okay, I neglected to tie in some of the comments from my US colleagues who lead coverage on Apple. I think that, whoops, my earpiece has dropped out.
Oh, we're doing well this morning.
Sorry, just a second. Whoops.
Well saved,
This
Robert.
will go down on the bloopers.
Robert's just about to save the situation. Robert saves the day. You're okay now, Robert? Go on to tell us about what US
No, I'm
colleagues
okay,
are
I
saying.
can hear you. Yeah, US colleagues have said, I think, it's probably likely you'll see a bit of a mix shift within their iPhone shipments, with a bias towards the higher end products like the iPhone 15 Max. So we could see the ASPs come out a little bit better than expected, and therefore the revenue numbers for the quarter that are about to report could be at the higher end. But again, the market looks forward. So if we've got ongoing weakness on the China side, that is obviously an ongoing risk for them. So, the key question for investors and for Apple is where is the next big killer product going to come from? And to be honest, it's quite hard to see that at the moment. So I think it will remain challenged for them for some time to come.
Are we just waiting for the AI story to develop and for some clarity on what it looks like for Apple? That's what it feels like investors are just waiting for. Every other stock in the Magnificent Seven has got some sort of narrative around this. Apple doesn't. It is very quiet on what it's doing with AI right now, and we need some information. Are we just going to have to wait until we get that to understand what the strategy is going to be, and then maybe that is the catalyst we can use maybe to move the stock one way or the other?
Yeah, as you know, Apple likes to, it has its bigger product launches and bigger trade events where it likes to talk more about its longer-term strategy and forthcoming product lineup. So having said that, I'm sure they will talk about AI tonight. But again, just taking a step back and being fair to them, maybe more through accident than design, the fact that they are a little bit behind on AI may not necessarily be a bad thing, because at least they're foregoing the tens of billions of capex investments that the rest of or a lot of the other Magnificent Seven are having to invest in at the moment. So in a way, that's maybe a positive for them. And also with partnering with a more developed player, perhaps like an Alphabet or Google, again, maybe a more cost-efficient way for them to gain access to that market. So it may not necessarily be a bad thing in the long run, but we'll have to wait and see.
All right, Robert Lee from Bloomberg Intelligence, previewing those Apple earnings for us. We thank you so much. Of course, you do not want to miss our interviews with the CFO of Novo Nordisk coming up just after 9 a.m. London time. And of course, we later hear from the company's chief executive as well. Plus later in the day, Bloomberg speaks to the CEO of Moderna at about 12:30 London time. That does it for markets today. The Pulse is up next. Don't go anywhere. This is Bloomberg.
do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Higher for longer while the Fed holds rates steady for a 6th time in a row. The Fed Chair Jay Powell keeps cuts on the table, but the timing is less certain.
I do think it's clear that that policy is restrictive. I think it's unlikely that the next policy rate move will be a hike.
Well, Novo Nordisk quadruples U.S. shipments of its blockbuster weight loss drug Wegovy as it raises its profit and sales outlook. We'll also speak to the chief financial officer of Europe's most valuable company in a few minutes. Plus, oil giant Shell maintains the pace of buybacks as profit beats estimates. We'll have a deeper dive in our weekly Bloomberg UK show at 9:30 a.m. But first thing is first, let's take a look at some of the European market movements. Now, stocks definitely trading a little bit mixed. Treasury yields ticking lower after we heard from Jay Powell, really downplaying the prospects of further interest rate hikes. Now, the yen does seem to be resuming some of the losses. A lot of the focus is not only on cross assets, but some of the earnings, which is why we're seeing this discrepancy in some of the sectors. So this is your cross asset check. You can see yen 155.46, one of the main things that we've definitely been keeping an eye on this week. And then there's a little bit of further insight into the health of the U.S. economy. Of course, that will come from April non-farm payrolls, also due tomorrow. For the moment, you can see the U.S. 2-year yield 4.9393, and then gold 2,309. So the Fed Chair, Jay Powell, keeping hopes alive for a rate cut this year, but he also says that a burst of inflation has reduced confidence that price pressures are ebbing. Well, let's get more from Paul Dobson, our executive editor for Asia Markets. Paul, I know there's a lot going on, so congratulations, first of all, to you and your team for really some fantastic coverage. Is a lot of the focus on earnings, or is it really more on what inflation, what the Fed path ahead is?
Yeah, hi there, Francine. Well, I think that the earnings picture seems to be a little bit more on the micro side rather than the macro side at the moment. We've seen individual companies have some pretty terrific results and performances, but we've also seen a lot of companies getting punished if they've fallen short of analysts' lofty expectations. So there's some lessons for us there. But overall, the sentiment seems to be holding up fairly well. And of course, you know, the backdrop is the Fed is still giving us the signal that it's more minded to be cutting rates at some point in the future than it is to be hiking rates anytime soon. And so long as that supportive backdrop is there, it feels like the equities market can continue to take some kind of solace and support from that backdrop. So even if we're not going to get any rate cuts, you know, until towards the end of the year, Actually, the economy seems like it's holding up pretty well anyway. Earnings steady as she goes, maybe. Some good numbers out there. But yeah, reasons not to be too bearish on the market, at least at the moment.
So, Paul, what did you make of what we heard from Jay Powell yesterday? Again, he talked about cuts, but actually wouldn't give a time frame. What does that mean for markets?
Yeah, so I think that there was a few telling things from the Fed there, and we saw in the market reaction, stocks only got a very short lift, and that didn't last very long. People were back to focusing on the bigger background, because basically if the Fed is data dependent, then you want to see the data. You don't necessarily want to listen to what the policymakers are saying. I did think that it was interesting, a couple of things that he said. First of all, he's very much against the idea that there's a stagflationary background. He said, I see neither the stag nor the inflation. So he's not terribly worried about the inflationary forces there. He's definitely not that worried about any signs of a slowing economy either. That said, kind of the Fed would like to cut, but it knows that it's not going to be able to get there. On the fixed income side, I thought things were a little bit more interesting. We did see yields end the day lower, taking a little bit of support from the Fed, but also from the fact that it's tapering off its quantitative tightening a little bit more than people had expected. And also in the issuance update, we see that auction sizes are remaining the same for the next quarter. So on the supply-demand balance, at least, Treasury is looking a little bit more, in favor after the sort of triple whammy of news that we had in the US yesterday.
Wonderful. Thank you so much, Paul, for a terrific, as always, briefing, of course, on what's happening in global markets. Now, Europe's most valuable company has raised its profit outlook. Well, Novo Nordisk says it's now shipping 5 times more introductory doses of its weight loss drug Wegovy in the U.S. than at the end of last year. The Danish pharmaceutical giant has also announced further investment in production as it struggles to meet demand. Well, I'm very pleased to be joined now by the Novo Nordisk Chief Financial Officer, Carsten Munk-Knudsen. We also welcome listeners on Bloomberg Radio. So, Mr. Knudsen, thank you for joining us. There's a lot going on and a lot of appetite, of course, from investors to try and understand what Novo does next on supply and, of course, on pricing. What can you tell us about supply? We understand that you have welcomed, of course, more new doses to the U.S. Can you talk us about those figures? How many new patients and how much that will change in the future?
Yeah, and good morning, and it's a pleasure to be here today with a solid set of Q1 results and a raised outlook. So as to Wegovy and the Wegovy launch and how that progresses, then the short story is that it's all on track compared to our plans. We have been raising our starter doses in the U.S. from around 5,000 when we entered this year to more than 25,000 as of the latest weekly data point. So more than 5 times up compared to the start of the year, which then in turn translates into total number of scripts, which are now exceeding 130,000 scripts per week. So we see a steady ramp, and our approach is really to scale that over time as more manufacturing capacity becomes available.
So, Mr. Knudsen, can you again give us an idea of this gradual ramp up going forward? Will the figures be kind of similar, and how does that feed into your guidance?
Yeah, so it's baked into our guidance, and we stepped up first step in late January in terms of the starter doses, and then we again increased the amount of starter doses here in April, and that's what you see translating into new to brand script starts, and then as we scale manufacturing, then we will be scaling starter doses gradually. We're not out guiding specifically on how much and when, apart from what you can see implicitly in our full year guidance range between 19 and 27% sales growth.
So some analysts are saying that price pressure in the last quarter was actually probably more intense than they were expecting. Do you expect that to continue going forward? And is this just because of the nature of the drug?
Well, I wouldn't say that price pressure is more intense than what we expected. We've actually been out for quite a while saying that as the market matures and volumes ramp up and competition enters the market, then it's natural that prices will be coming down, and that's what we've seen in the first quarter and also what we expect for the full year. So no surprises on that front. And there I'll say again, this is not a price optimization type strategy. This is really a strategy about building a market which has very, very sizable potential. So as of today, we're only serving a little bit more than 1 million people with obesity in a global population of people with obesity of more than 800 million. So it's a volume strategy with a significant runway.
But is it fair to say that weight loss drugs maybe face more intense price competition than other types of medicine?
No, I wouldn't say that. So competition is, of course, a function around the number of players in the specific marketplace, first of all, and then I would say secondly, pricing is also a function when we discuss with payers around the benefits, the value that a product brings to the market, and we're having very productive engagements with payers in the U.S. So right now we have more than 50 million people with obesity in the U.S. covered with Wegovy. So in reality of our Wegovy business, 80% of our Wegovy business, that's with the patients who are paying less than $25 per script.
So given the cash that you're generating, of course, from this uptake in GLP-1, can you give me a sense of how much you're reinvesting? How do you look at capital allocation, like margins versus reinvestment?
Yeah, so we have a disciplined approach to our capital allocation, and of course it's a favorable position to be in with rapid growth and solid cash generation, and our starting point is really that to invest in our business organically. We've done that for more than 100 years now to build the business that makes a difference to society and reach as many patients as possible within the therapeutic categories we're operating in. So step one is invest in our business, building obesity, building supply chain, and expand our R&D pipeline organically. Then, of course, we like to return capital to our investors in form of dividends, so a 50% payout ratio. Then we also pursue external business development activities to scale up our pipeline. And then finally, we do share buybacks with the excess capital when we're done with the first three.
How much firepower do you have now for acquisitions? Is there anything that looks attractive as you really look to solidify your position, but also make sure you have best-in-class next-generation drugs?
Well, so when you look at our balance sheet and pre-Catalent, we have zero leverage if you look at a net debt EBITDA type measure, and for an industry, then you could go to call it 2 or 2.5 easily. And Catalent only takes us, it's still south of 1. So we have significant bandwidth in terms of M&A. But here the important point is that's not our M&A or business development strategy. Our strategy is really to what you would call a string of pearls type strategy. So to go for preferably early phase R&D assets, so preclinical or phase 1, perhaps even phase 2, and there it's not really a capital issue on our side.
Sir, Novo has such an amazing story, and you've ramped up supply. You're giving more doses, especially in the U.S. Your share price is down 2%. Is that a worry for you? Do you look at the share price?
Of course, I always look at the share price, but it's important to note that we run the company for long-term value creation, and so we're not managing the company for the quarter. There's a good disciplining effect of being a listed company and have to be accountable for our results each and every quarter. But ultimately, we're focused on creating value for the long term, and in that context, we raised our guidance for the full year. So on that front, we're fully on track with our plans.
Thank you so much for your time today. I know it's a very busy day for you and the team there in Denmark. Carsten Munch Knudsen, the Chief Financial Officer and Executive Vice President of Novo Nordisk. Now, we'll also be talking to Novo Nordisk's Chief Executive and President, Lars Fruergaard Jørgensen. That's at 3:30 p.m. UK time. That's 10:30 a.m. Eastern time. Now, coming up, Bloomberg has learned that the U.S. and Saudi Arabia are nearing a deal which could reshape Middle Eastern politics. More details on that next, and this is Bloomberg.
names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Well, Bloomberg has learned that the U.S. and Saudi Arabia are nearing a historic deal that could potentially reshape security in the Middle East. Let's get the details now with Roz Matheson, our EMEA news director. Roz, so they're nearing a defense deal. We're also hearing movements in Saudi Arabia. Is that a good thing for peace in the Middle East?
Well, this was a deal that's been in the works for a very long time, and of course it was put on ice when we had the outbreak of war in Gaza, and it's a much toned-down deal than we're initially talking about. It still would mean that Saudi Arabia would get access to much higher-level defense equipment from the US. It would help push out China in that enterprise also with Saudi Arabia, and the idea is they agree on a deal, and then they go to Israel and say, we'd like you to be part of this deal also because you'll get diplomatic status with Saudi Arabia, but you have to stop the war in Gaza, and also we need to talk about Palestinian statehood, and that's obviously a non-starter. It's also complicated enough that it could strike trouble in the US Senate, so there's no guarantee this deal will even get through, but at least it's a signal that Saudi Arabia and the US are talking, and they want those closer ties, and they want to use those closer ties as leverage to bring Israel further into the tent.
Roz, what can you update us on actually protests in campuses across the U.S., but also in European countries?
Well, that's right. We are seeing protests not just in the U.S., but around the world, in much smaller cases, of course, in the U.K. and Europe as well. But as is the case with these things, they often start with students, with younger people on campuses, and that's what we've been seeing, particularly in the U.S. We do know the protests have continued. There wasn't the outbreak of violence that we saw again last night. We haven't seen police moving in wholesale to campuses again, but they're not going away. They haven't disappeared. And certainly there's that pressure coming from younger people in the US. And that's really important when we look ahead to the US election, for example, because Joe Biden, he needs not just the Jewish vote, but there's also a significant Arab vote in the US to think about. And obviously it's very much percolating in the psyche of younger people, and those are voters that he really needs to count on come November.
Roz, thank you so much. Roz Matheson, there, our Bloomberg EMEA news director, of course, on many uncertainties across the world. Now let's take a closer look at the markets with Ozan Tarman. He's Vice Chair of Global Macro at Deutsche Bank. Ozan, I mean, when you look at uncertainty around the world, it's really playing out in the markets. We have a lot of earnings, there's geopolitics, a lot to get through. What's driving markets? Monetary policy on the Fed or earnings?
Thanks so much for the invite. Day after Fed, before NFP, Champions League final. Thanks so much. Wonderful time to be on the pulse. Look, obviously, Fed and rates and inflation path is a big factor, especially for the short term. Going into yesterday, we were a bit too hawked, too bared up. We were too into whether he would say the hike word or not. And also, what he did on the QT front was very important. At the end of the day, that is, in quotation marks, easing. Even my dream team, Matt Duzetti and Brett Ryan, were expecting to hold until June, maybe. Most people were expecting lowering to 30 billion. He went to 25 billion. On top, he answered the high question pretty clearly. And then I loved the highlight he gave, no stack or no inflation. Let's see where we are on that come June. But for now, that gave a bit more life to the pain trades, which are stronger equities, softer dollar, lower rates.
But Ozan, actually, I mean, what you say on QT is really crucial. Does it also give us an indication of what he could do on rates? I mean, is it one and the other? One can help the other, because actually interest rates are a much blunder, way of dealing with it.
I think he did want to go in June, but then he had to respect the data as well. So up until March, it was an okay story, despite the seasonal effects, etc. Owner's equivalent rent, just like Powell, I have my reservations, but it is what we have. The last CPI print is 0.359. If that came 0.34, rounding it back down to 0.3, you would have a different world. But now market is forcing his hand. So we went from 7 to 6 cuts. Last time I was here, we were almost laughing about it. I never believed that. But for my taste, a bit too quickly to this December and one and done consensus. My gut feel still says he will turn out to be right about shelter inflation, car insurance being backward looking. He will get some good news in the next few months, and he may be able to get away with one cut in September, actually, before the elections.
Ozan, how much time are you spending trying to figure out what happens with yen, the BOJ, and whether, frankly, Japanese authorities can even stem this decline?
A lot. I was expected to come here to talk about Powell, and then one more highlight, right? Possible intervention last night. Again, it's very in vogue for some traders, especially those who are long dollar yen, to find it futile, but I like what they're doing. Right after so-called dovish Fed, actually some of my clients were mumbling around 7:50 p.m. our time. What if Bank of Japan comes, Ministry of Finance comes now? Well, they did. So at least it's keeping it two-way. It's giving more uncertainty. Now, whether it becomes effective or not, everybody is going to Japan, right? You were there, wonderful photos from Tokyo. What is not to like? Higher stocks, higher banks, inflation, give or take 2%. So I think Ueda-san is thinking that if he lets the yen go a little bit, that's a better trade-off than hiking rates too aggressively. So I don't think we will get that yen strength. But that being said, I do agree with our team, Koyama-san. We will see 2 more hikes, we predict, in July and December. Enough to stem the tide? No, but for the moment, it will keep dollar yen two-way. And more two-way dollar yen also helps the pain trades at the moment.
Okay, what's your favorite trade right now in 20 seconds?
In short term, I would still go with anti-risk parity. They have the momentum. Give me a high NFP like people expect, or high wages tomorrow. We will go steeper rates, stronger dollar, lower equities, but medium term, I think risk parity will win. One more thing, Deutsche Bank, one more advertisement from Team Yared and Sokos. European rates may surprise. They may end up selling off even more than US. There may be a tightener. Europe, thanks to your Italy, Spain, may surprise on the upside.
Ozan, and then we haven't even talked football. There you go. Ozan Tarman, really too short a time, Vice Chair of Global Macro at Deutsche Bank. Much more to come. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. but we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Let's return to Ozan Tarman from Deutsche Bank. Ozan, the markets aren't really focused on the U.S. election right now. Were they wrong?
No, they're not, because I think it's the whole thing is closer than they think. Most market players, at least a month ago, expected Trump to win by like 70%, 80% odds. I think it's much closer. Depends on 3 swing states, Michigan, Pennsylvania, Wisconsin. Very different outcomes, Francine, on what happens. If we get Trump back, on paper, stronger dollar, tariffs, steeper curves, more spending, and higher equities, deregulation, and then maybe question your trust moment a bit more because more fiscal looseness, central bank question marks. If Biden defends, I think that means softer dollar, again, good news for equities, and probably lower, softer rates with Brainard Yellen in charge.
Interesting. Ozan, thanks so much. Ozan Tarman from Deutsche Bank. Up next, we focus on the UK. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything. markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Good morning, everyone, and welcome to Bloomberg UK, a special focus on the biggest challenges facing the British government, the economy, financial services and markets. I'm Francine Lacqua here in London. Now, it's been a big week for UK banking after the shock resignation of HSBC's chief executive, Noel Quinn. We've also had a flurry of earning reports over the past week, Standard Chartered topping estimates in today's results. So for a fully interesting and in-depth look at the banking sector in the UK, I'm joined by Bloomberg's Tom Metcalf and Paul Davies from Bloomberg Opinion. I've been looking forward to this conversation all week because there's so many questions I had about why Noel Quinn, first of all, left, Tom. I mean, there's many reasons that have been cited, but does it leave a hole in the UK bank? Is it even a UK bank or is it more of an Asian bank?
Well, I think, operationally it's really an Asian bank, and talking about reasons to leave, that's one of the reasons he gave. It's such a grueling job right at the top. He's one of those banking executives that has to fly commercial. I mean, don't feel too sorry for him. It's probably a very nice class of travel he goes, but it's a really hard job. He's travelling twice a month, and so after 5 years, in his telling, at least took its toll. But I think also there's, of course, the politics at a bank like HSBC, the interactions with the very powerful chairman in this case. And, I was reading Paul's article or column about it, and I think he conveyed very nicely that, for me, it was a big surprise. I got a 5 a.m. call when the news broke, but when I read Paul's column, I was like, I guess there is actually, a very good case to be made. This is a good time for Noel Quinn to be leaving.
Wait, why does he fly commercial when I imagine many Wall Street titans have private planes? Is it the UK? It just feels better, right?
Flying private is, I imagine, much nicer. But that's the difference, say, between a CEO of an HSBC and a CEO of, say, a JP Morgan, right? A, you're getting paid half as much, and B, there's a lot more focus on kind of the cost level, which is really fascinating. Probably after a while becomes quite a grind.
Paul, you've written some really great columns, kind of explaining what you think, what he's achieved so far, and also the kind of person that the bank needs to put in charge going forward. Has Noel Quinn achieved what he set out to achieve?
I think so. I think it was put there to continue a lot of the work that Stuart Gulliver started, many years before, which was to kind of, slim down and make the bank more focused on kind of its key markets, and to kind of make more sense to investors in lots of ways. It was like, many years ago, they used to call themselves the world's local bank. They tried to do everything everywhere, and it was too much. It was too costly. They didn't make the returns in enough markets, and so they really needed to refocus. I think, he's sold a lot of businesses, he's cut costs, he's cut the balance sheet right back, and he's made it make a lot more sense. The challenge now, which has always been a challenge for HSBC, is to find, it's still a huge bank, is to find enough kind of extra business, some growth, to kind of make a difference, to kind of show some change in the bank, yeah.
So who's the ideal candidate, actually?
So somebody who isn't, that desperate for a large amount of money. I mean, like Tom said, they're quite sensitive to costs. He was long one of the lowest paid CEOs of any kind of major bank, only on about £5.5 million a year. Like the end of last year, his first long-term incentive plan kicked in, and that went up to about 10 million. So anyway, you compare him to like Jamie Dimon, it's like, it's like a fifth of the pay or something like this, not even half, But I think what they will really want is somebody who, maybe with a good background in kind of, wealth and private banking and personal banking. That's kind of one of the main hopes for growth in the future, a kind of a, more capital light, kind of, higher return business, and particularly in Asia, which is still, despite China's slowdown, one of the great sort of sources of wealth creation and burgeoning middle classes and affluence and so on and so forth. Yeah, and then somebody probably with a bit more sort of maybe digital nous to kind of, help modernise the bank still too.
To both of you, does nationality matter? And is it more of a politician's role because you're dealing with, the Chinese authorities as well?
Well, there's a lot of different things here. I wouldn't say any specific nationality necessarily is kind of top of the draw. The most interesting thing for me would be, is it an internal or an external candidate? They've come out and said we're looking at both. You would think for a bank like HSBC, it's so complex, such a massive bureaucracy. Internal candidates have normally been preferred. But of course, maybe, now's the time with Noel Quinn having done so much of a hard graft. Do they bring in someone, completely from the outside to shake things up? I think that would be a surprise, but it's possible. But the other big thing, and let's go back to that massive debate they had with Ping An, their largest shareholder, is, clearly they want someone with deep Asia focus, deep Asia knowledge. If they could magic up a perfect candidate, it would be someone, from Asia. But I don't know if when you look at the people who might put their hands up and who's around, if that perfect candidate exists.
We also, so the chairman is also leaving in 2 years. We were kind of, are there any big names without, in banking that could do this job that are currently without a job? Or do you think they'll go internal?
So I think Simon Cooper, who spent a long time at HSBC and then moved to Standard Chartered, he relatively recently left there. He was head of their investment banking business. There's a couple of other people, external candidates that have been mentioned. Helen Wong, who runs OCBC, who previously spent in Singapore, who previously spent nearly 30 years with HSBC. Very impressive executive. I met her about a decade ago in Shanghai when she ran the HSBC China business. But she is 62, I think, so, she's no younger than Noel Quinn, and she's not been a CEO of OCBC for that long. And then the other external candidate is Charlie Nunn, of course, who currently runs Lloyds Bank. Again, he's much younger, an impressive executive. He's done a pretty good job at Lloyds, I think. But again, he's not been at Lloyds that long. And he's another person who also had a decade or so at HSBC before. So all three external candidates that have been mentioned are they're still sort of HSBC people as well. It's like the apple's maybe not going to fall that far.
We also had Standard Chartered. How's UK banking doing in general? Standard Chartered, again, with a lot of presence outside the UK. So it's kind of like UK-based, but also not that UK in its complexion. Yeah, and that's always the interesting thing about the UK-listed HSBC and Standard Chartered is the story there is really much more, in both cases, emerging markets, certainly Asia. It's a very strong set of results as I read them today. I think shares are up 7% when I last checked. It's a couple of things. They seem to be attracting more wealth customers, the holy grail for so many bankers right now. And also the traders at Standard Chartered have continually delivered over the past few quarters. And, that their trading arm doesn't get much credit. You don't normally think of traders. You don't think necessarily Standard Chartered, but they're doing a good job. And so broadly speaking, the street is responding pretty positively. And for me, the other fascinating story here is Standard Chartered. You've now got the longest serving UK bank executive. He's just seen, I think, off his fourth HSBC CEO or something like that, Bill Winters. And for me, that's another question is, he's been for many, many years trying to transform Standard Chartered. Does this, latest quarter suggest, finally, there's light at the end of that tunnel? Or, as in the past, might one good quarter be followed by a nasty surprise the next? One of the other things we're trying to explore is, and I know we'll speak about BHP and whether there's a pipeline for IPOs and what this means for companies, but I know you were also interested in talking, Paul, about a possible merger in Spain. And I don't know whether there's a possibility of a merger amongst UK banks. It always feels we're a little bit overbanked, but yet these are also big banks.
Yeah, I think there's maybe some smaller banks that could roll together, or maybe sort of parts of their business get taken out by some of the larger banks. So obviously, Barclays has done a couple of deals in the last couple of years. It took a book of mortgages from Kensington. It took on the Tesco Bank last year, I think. And there's a bunch of sort of smaller banks that could, maybe be combined together that might make a bit more sense and be a bit more competitive as larger entities. So, within the UK, we could see something like that. There's not going to be deals between the large banks in the UK. They're already too dominant. They already have too big market share, which is part of their problem. Part of the problem for a bank like Lloyds is how do you grow when you already massively dominate your home market?
Yeah, if you had to rank the UK banks, or at least, how's Barclays doing? We're kind of almost at the end of earnings season in the UK.
Well, it depends what you're looking for in a UK bank, right? Like a Lloyds, as Paul said, absolutely massive, dominant here, big mortgage. A lot of those kind of businesses that shareholders tend to value a bit more highly than when you look at a Barclays with that real big global investment bank, as they call it. In terms of how Barclays are doing, there does seem the strategic reset is being embraced. I think the hardest thing there is just it's a huge sort of existential thing for them is can they really maintain what they clearly want, which is a big investment bank, but at the same time, is that really what shareholders want? And, you know, it's just a tough sort of path to try and follow for the execs there.
All right, thank you both for joining us. Paul Davies there from Bloomberg Opinion, and Tom Metcalf stays with us to understand about the City of London and, of course, what we heard not only from Shell, but BHP and Anglo. Coming up, the UK oil giant Shell reporting a strong set of first quarter results, beating expectations. We'll be discussing the numbers, plus what the future holds for commodity companies here in the UK. That's next, and this is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Now, oil giant Shell beat expectations in its first quarter results and announced it will buy back $3.5 billion of shares. Now, uncertainty remains over its future on the London Stock Exchange as a Shell chief executive talks of the company being undervalued compared to rivals listed in New York. Well, let's unpack all of this with Will Kennedy, Bloomberg's senior executive editor for energy and commodities, and also to understand what this means for the City of London. Tom Metcalf is still with us, Bloomberg's EMEA finance and investing managing editor. So thank you for sticking around, Tom. Welcome to the program. Well, I mean, there's a lot going on in the commodity space, but probably the most interesting, and thank you again for coming on the podcast, where we really, dig deep into if Shell leaves, if some of these companies, if Total leaves France, what is the FTSE left with? Shell beating expectations today, like blowout.
Good morning. Yes, it was a really good quarter. It was hard to find anything to say that didn't go well. Earnings were ahead of expectations. They maintained the pace of buyback. Trading performed extremely strongly. They kept a tight lid on capital spending. Debt fell. So, yes, all in all, pretty good quarter.
So should we take it seriously when they say, look, there's not enough capital markets? Or is there something that's, we explored this also, there's this, surprise that was not a surprise to you, but a surprise to most. BHP offering to buy Anglo.
With Shell in London, obviously Shell is the sort of jewel in the crown of the London stock market. It's the biggest company on the stock market. It is one of the world's biggest oil companies. But the CEO's complaint is that when you look at the company next to Exxon in the US in particular, the valuations aren't the same. And we talked about the fact that investors in Europe are not keen to own oil and gas, so they're chasing a smaller pool of investors compared to the US, where investors are much more relaxed about owning oil and gas. And that's why while someone at Shell and Total's Patrick Pouyanné have opened up this conversation about, well, should the stock be listed in New York? I don't think we're there yet. Shell's clearly doing everything it can to close the gap. They're buying back shares. They're talking up the valuation. Investors may notice, they may notice the value, but I think if this situation continues for some time, I do think it's a serious possibility that Shell really looks at it hard.
Well, I find it incredible. When you look at the FTSE, I mean, it's so commodity rich, right? BP, Shell, some of also the miners. Is this historic?
It is. I think it goes back a long way. Oil and gas, obviously, BP and Shell are two of the oldest oil companies in the world, British based, with heritage in different parts of the world, and it remains an expertise for the UK. And I think mining, likewise, there is still a community of people in London who understand natural resources very well, and all the bankers, the analysts that come with that. And that's still strong. I mean, if you look at the FTSE 100, the top 10 companies, in that you've got 2 oil and gas companies and 2 miners.
Yeah, so, you know, the question is, if, for example, BHP buys Anglo, and Anglo actually leaves the UK, is this a problem for the City of London? Again, it's quite complex, because you're talking about investors needing to invest in some of, you know, the dirty money, fossil fuel and mining, but also the City of London is quite reliant on it.
Oh, yeah, absolutely. I mean, it would be a big problem. As Will points out, you know, City of London, historically, energy, commodities, finance, that's really where it's sort of listed companies are. And, you know, you lose, you know, a big company, like, for example, Shell would be historic and an absolute disaster, because there is so much ancillary stuff that comes with having, you know, a big listing like that. And you'd eventually, you know, it wouldn't be like an immediate collapse, but there'd be a sort of slow puncher of talent and stuff, and it just makes the City of London's job harder of attracting capital, attracting deals. You know, of course, City of London's not just the equity market, but it's one of the, you know, a key plank. So I'm sure they'll be doing everything they can, and it's interesting looking across at Paris as well with Total. You've had a pretty strong political statement there on their desire to keep it, and that's true here as well. But of course, ultimately, you know, it's the money that talks, and you know, it's still a way away. But I can certainly see a world where, yes, you know, some very big companies, you know, not just the smaller ones we've seen in London, start to, you know, really genuinely move abroad.
I mean, there's a number of reforms, you know, coming for capital markets in the UK. Will they help, or actually are they still not, you know, ambitious enough?
Yeah, I mean, I think the trouble is in what can practically be changed. You know, there is no sort of silver bullet out there that everyone's thinking can be done. It's very much, you know, some of it is a bit of sentiment driven, and, you know, some interesting comments that, you know, if maybe London can get some one big deal, can get some one big IPO, that might change the sort of dynamic here a little bit, because the strengths of London aren't, you know, drastically worse than they were, say, pre-Brexit. But it just puts it in a harder position to compete as a truly sort of international financial centre, at least in certain sectors, so tech. And, you know, as Will points out, oil, normally a huge area of strength for London. But, yeah, if you compare Exxon to Shell, you can see why people are considering a move.
Yeah, at the same time, because of BHP and others, is there, are bankers telling you that there's more in the pipeline in terms of M&A? I mean, we've had a tough 18 months, and I keep on hearing about green shoots, but we haven't really seen them on paper yet.
Well, that is the good news. There's at least there's a lot of chatter. You know, you've got to wait and see the evidence, right? But already, at least in banking, you've seen a few deals come through in Spain. Those animal spirits might be seen as returning. So I think there's a lot of expectation on, you know, there will be this bounce back. You've seen that kind of come through in some results like Goldman and Morgan Stanley. And yeah, it'll just be curious to see where they land. You know, in London, it might well be more take privates, which is probably not what the city wants to see, actually.
Yeah, probably not. The BHP decided, actually, a couple of years ago to delist from London. Was that, I mean, has it been a success in terms of what they've been doing?
I think most people see the structure as simpler, and it makes the company probably more agile. I think it would be harder to do the deal that it's proposing with Anglo if it still had that slightly complicated dual listing structure, which was a hangover from an acquisition they previously made in the early part of the century when they bought Billiton. So BHP has historically been an Australian company, but yes, I think it has made them more nimble and put them in a position perhaps to take another UK-listed mining company out of the picture.
Well, what I also find very interesting is that you currently have a chancellor, and you currently have, you know, a lot of policymakers looking to the future when you look at valuations in the US, saying, look, it's AI, it's the new economies, it's these things that will give us growth. But of course, Anglo has copper, which is crucial to anything that we use and for the energy transition.
That's exactly right. I mean, that is the big narrative to this deal is that BHP is an extraordinarily profitable company, has these enormous cash flows from their giant iron ore mines in Western Australia. It sees an opportunity to take that cash flow, take that balance sheet, and use it to make copper acquisitions, because I think Mike Henry, the CEO, has a real conviction that copper is going higher than here, and that's the business he needs to build to make BHP ready for the future. And actually, its own portfolio doesn't have much growth. So we might see more people making copper plays, but the universe of targets is small. I think it's going to be a very interesting couple of months ahead.
I mean, I was going to ask you, how long are we going to speak about this possible deal? Are we going to see, like, White Knights or other people trying to buy this asset? I mean, it depends. It depends on a number of things. I think the expectation is that BHP, well, they do have to shut up or put up by the 22nd, so about just over 2 weeks' time with an offer. I think some people expect they might sweeten that offer, but even if ultimately BHP Anglo doesn't happen, Anglo will have to change. The point is, it's copper. A lot of analysts are saying that its copper business is actually worth more than the market cap of the whole company, so they have to find a way to release some value. They've got Elliott, the activist, as a shareholder now. No matter what happens, Anglo will not look the same in a year's time. All right, thank you both for joining us, Bloomberg's Tom Metcalf and Will Kennedy. Now, be sure to subscribe also to our podcast that I host with Allegra and Dave as we uncover the best stories and speak to the people in the know. Coming up, the UK high street retailer Next reported a solid start to the year, but as forecasts remain unchanged, we discuss how the unpredictable British weather, oh yes, very unpredictable, is dampening expectations for UK stores. That's next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
Welcome back. Now, UK retailer Next has reported a solid start to the year as first quarter sales showed easing price pressures and boosting shoppers' desire to buy. The high street chain stuck with its outlook with a cold April expected to hit second quarter sales. Well, joining us now is Bloomberg's Sabah Meddings. Sabah, I mean, when you look at Next, it's kind of like a little bit of a bellwether, but what do the results tell us about the performance of some of their peers?
Well, what we saw from Next is there's no escape from the weather. We had quite a warm spring last year, which meant people were out buying their summer clothes nice and early. But this year, I mean, we've all seen the weather outside today. I think there was a thunderstorm this morning.
I mean, it's so depressing.
It is. But it really does affect what people's shopping habits. And what we want in the UK, I guess, for our retailers is quite strong seasons, which will drive people out. So Next did guide, rather than flat sales this quarter, a 0.3% decrease, which actually could have quite a negative sentiment if we think about Marks and Spencer's, which is reporting later this month, and also ABF, the owner of Primark. We could see, you know, this is sentiment that people will read across for their results as well.
I mean, it's kind of common sense. So you're cold, you don't want to go and buy what's in the store, which is the offerings for summer. What does it do with the stock, and why did Next do so well compared to some of the others?
Well, Next, I mean, just on stock, I mean, what we have seen is that people have got a lot of summer stock, in their stores, and if people aren't out buying it, they may be forced to discount. You're right, Next has often kind of beat the sector, and a lot of that is to do with its CEO, Simon Wolfson. He was quite quick to realise that perhaps being on the high street in as much as they were before perhaps wasn't as sensible, so they moved out to out-of-town retail parks. And they also have this technology platform where they brought on third-party brands. They've bought Reese, they've bought Made.com, they've got Fat Faces on there, so there's much more for customers to buy, and then they can lend this technology out to other brands which might want to outsource their online shopping, and they're expanding overseas. So there's kind of quite a few factors that Wolfson has deployed.
How are supermarkets doing?
Supermarkets, I mean, the interesting one at the moment, I guess, is Asda. They're in the middle of a refinance at the moment, and definitely there's lots of questions about the direction of that chain, which is owned by the private equity firm TDR Capital, along with the Issa brothers, the billionaires from Blackburn, who kind of grew their fortune on gas stations and are now they own half of Asda. Part of the problem is that TDR is trying to buy out one of those brothers, and there have also been questions from UK MPs on whether Asda, which was always the price leader on everything from petrol to food, has been overcharging customers, perhaps at the pump. So there's a few, and they're also looking for a new CEO with Mohsin Issa stepping down.
But the weather also affects them, right? Because we don't buy barbecues.
Well, exactly. You know, there's probably they haven't got their seasonal stock out. People are still perhaps cooking a roast instead.
There you go, roasts. Okay, happy May, everyone. Bloomberg's UK business reporter, Sabah Meddings. Now, another reminder to, of course, subscribe to our In the City podcast. This is Bloomberg.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. It is Bloomberg Brief. Let's set your agenda.
Futures rally as Powell keeps the dream of cuts alive, but is less certain on timing and pushes back against hikes. Another volatile session for the yen, adding fuel to the speculation of intervention. And Apple results later today may show how the iPhone maker is coping with a sales slump.
Well, the Bears definitely had a vice-like grip on this market as we went into the Fed and the FOMC. But a lovely phrase from Standard Chartered. What Powell managed to do was put a distance between him and the hikes. He really did not inflame that narrative. Rate cuts, they are perhaps delayed, but they are not derailed. That is the narrative. Now, the equity market in of itself had a tough time because AMD came out with a chip forecast that disappointed. Down went the stock by nearly 9%, and she is bid up this morning. Have a look at the bottom of your screen. You can see a slightly better bid on AMD. So that's turning that around. Here we are. We're down by 5-6 basis points on the bond market yesterday at one juncture. As I say, this is a Fed and a Fed put that squarely lives there. We're down by another bip at the moment. Dollar yen, I'm just looking at the bottom of the screen. You are looking at a red headline right now on Bloomberg. The Bank of Japan accounts point to an intervention of about 3.5 trillion yen. Keep an eye on dollar yen because, of course, we had this speculation. It rallied by 3%, gave 50% of that rally back. Is the Bank of Japan winning or losing the unilateral battle of intervention? Danny, the details.
So, Manus, just looking at the numbers, so 3.5 trillion yen, as you mentioned, intervention yesterday. I'm just doing some quick math on my terminal here. That is about $20 billion. Let's put this into perspective. When they intervened last time, 35 billion. So this is slightly less than the last one. But remember, in 2022, they intervened with $62 billion. In this week alone, Manus, we are above $50 billion. We're about $55 billion, almost the totality of what they did in 2022.
And still, this market pushes back. So we had this suggestion that there was the intervention. It rallied by 3%. We looked at the chart this morning. It gave back 50% of that. The issue is this. Are they pushing? Are they throwing good money after bad when the Fed is higher for longer? It's not hiking, yes, is the narrative that we take away from the Fed yesterday. But they are higher for longer, and is this good money after bad? And I've said it, and I will say it again. On unilateral intervention, it is a folly.
Well, part of the problem is there was no real reason for the yen to weaken yesterday, primarily because you had a Fed that wasn't as hawkish as most people had feared. The fact that the yen did weaken shows that there's almost this sense of bond vigilantes, but in yen land, that are willing to test the MOF. They tested them. They got intervention of, again, 3.5 trillion worth of yen, which is about $20 billion. But how much of an effect did it really have? Let's bring in our FX strategist, that is Vasilis Karaminis. Vasilis, we have the numbers now with us, that it looks like they intervened with about 3.5 trillion yen. Are they throwing good money after bad?
this is too good of a carry trade to give up on. That's the trader's perspective. As you said before, the fact that they spent almost already the whole amount they used back in 2022 shows that this is a market that really wants to buy this dip. And it will keep doing so as long as the Fed BOJ divergence stays intact. Now, it's one thing talking about, the Fed hiking or cutting rates. The real issue here is that the Bank of Japan is very, very slow in its tightening progress. Unless it goes on an aggressive hiking cycle, we would expect dollar yen to be bought on every single dip. And they're probably going to be using loads and loads of money. And during illiquid hours, which is kind of a key issue here, because Monday, Japan was out on a holiday. They came in yesterday after the Fed when liquidity was again low. There's talk among traders that they're going to do it again Friday or Monday when we have the Golden Week holidays in Japan. And mind you, UK is closed Monday as well. The fact that they are coming during such liquid hours, to me, shows that they're not confident they can go against this market. It's very, very determined to buy the dip in dollar yen.
Well, here's the issue, isn't it? It provokes the narrative then, what more must the Bank of Japan do? But Vasilis, if I look back at Friday from the Bank of Japan, they're lowering their inflation guidance for this year and for next year. And the narrative is that they don't want to hike rates and be that aggressive, but they may well be left with no alternative unless there is tripartite intervention as intimated by the letter delivered by the Japanese, by the South Koreans, and by the Americans.
The Fed is the key here, yes. I mean, if you're a trader and you listen that the Fed's in the market selling dollar yen, you don't want to catch that falling knife. You'll just stay away from it. And that can be a big game changer. You can drop below 150 in a blink of an eye. I think, yes, unilateral intervention is what traders are not afraid of. If it gets more coordinated, then that's another story.
Vasilis, it's a scary prospect that the yen is perhaps tied to the fate of the Fed at this very moment because of what we heard yesterday. We heard a Fed that frankly has no idea when they're going to cut. They say they're not going to hike, but the direction and duration of how long we last where we are is so uncertain that we are so data dependent. Is that not this kind of action every single time we get a piece of U.S. data in that tells us something about what the Fed is going to do? Is that the kind of world we're living in with the yen?
Yes, it's true. It's true. We're very, very much data dependent across the FX space because, remember, it's very much dollar and Fed driven. Now we'll get the U.S. payrolls report tomorrow, and I believe that the Fed's focus has turned to the labor market more than the inflation front because, yes, the progress is not going as they hoped on the inflation path, but there is some progress. As long as the labor market stays robust, I don't think how the Fed can communicate a dovish turn. So yes, I think we're down to waiting every headline there, trying to find the next catalyst. Because if you look at the dollar traded weighted index as well, it's kind of like consolidating within a kind of a narrow range in the past 2-3 weeks because the market is waiting for that. We're waiting for data to signal what if they're going to have to hit the bid or the offer in the dollar.
Okay, Vasilis, we'll keep an eye on dollar yen and all those time. The bar is high to begin those cuts in the United States of America unless there's something really radical happening in the employment market, and that's more or less what Powell said. But the put lives. Long live the Powell put. Vasilis Karamanlis on the breaking news from the Bank of Japan intervening. Other stories trending on your Bloomberg terminal this morning. This is what we've got for you. The US and Saudi Arabia are nearing a historic pact offering the kingdom security guarantees and a path to diplomatic ties with Israel. Sources say officials are optimistic a deal can be reached within weeks. Israel is expected to be offered a choice to join the deal, dependent on ending the Gaza war and agreeing to path towards Palestinian statehood.
And New York police have arrested almost 300 people breaking up escalating protests over the Israel-Hamas war at 2 universities. Their arrests were made at Columbia University and City College of New York. Police officials say outside agitators joined the Columbia protest, but are still determining how many non-students were arrested.
The Fed and other top U.S. regulators are forging ahead with a landmark plan to make big banks hold more capital, despite the calls for some critics to scrap it. Some officials are pushing for finalization as soon as August. Separately, JP Morgan expects to pay $100 million to settle a watchdog inquiry on trade monitoring gaps. Coming up in the show, We're going to discuss the Fed, the post-Fed analysis with Adam Posen, the president of the Peterson Institute for International Economics and a former Bank of England policy official.
But first up next, Novo Nordisk declines despite an earnings beat and an outlook boost. Why? We're going to ask that question to Emily Fields of Barclays next. Context Matters on Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
Oops, we did it again.
We have a strong economy. Labor markets are tight. We have to question, can the economy stay this resilient?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The jobs market is not deteriorating.
How long can that story keep holding for this Federal Reserve?
The source of this strength, we could debate it all day.
The April Jobs Report, Friday on Bloomberg.
As to Wegovy and the Wegovy launch and how that progresses, then the short story is that it's all on track compared to our plans. We have been raising our starter doses in the U.S. from around 5,000 when we entered this year to more than 25,000 as of the latest weekly data point. So more than 5 times up compared to the start of the year.
Well, shares of Novo Nordisk are raising their post-earnings bump as the weight loss drug Wegovy double-digit sales overshadow the pharma giant's upgrade in its profit outlook. Emily Field is the head of European Pharmaceutical Research at Barclays. She has an overweight rating on Novo Nordisk. So, look, the stock has done phenomenally well. We are in the vortex of a global craze. I mean, that's, I think, a very sort of fair estimation, Emily. When you look at Novo Nordisk, when you look at Lilly, the issue is supply, keeping up with supply. They're going to spend $11 billion. Do you expect them to spend a lot more? Is that CapEx a good number? How do I estimate $11 billion in the supply narrative of Novo? Good morning.
Good morning. Thanks for having me. Yeah, so that is the $10,000 question, is how can we translate all of these investments in CapEx into number of doses that they're going to be able to produce? They've guided for a low double-digit percentage of sales going into CapEx for the foreseeable future, 45 billion kroner this year. They're doing the Catalent deal as well. So they are making all the investments they need. Unfortunately, it's just really hard for us to translate on our side. What does that mean in terms of doses this year, next year, et cetera? But everything's on track.
And Emily, I can't help but wonder how much of this is about pricing power, because there was a moment where, okay, if you want to get your hands on these, you'll spend whatever is within your means to get them. Yale University put out that study that caused the stir, saying they could produce this stuff for $5 when they're charging something closer to $1,000. As the consumer gets more price sensitive, does that hurt Novo? Does that hurt Lilly? Does that hurt all of these drugs that are pricey?
Yeah, great question. So we are modeling, a mid-single-digit price decline per annum on a net basis for Wegovy in our modeling. However, what Novo is going for is they want most people to get this through their insurance, whether that's commercial insurance. They're also starting to make inroads into Medicare. So the out-of-pocket cost for the consumer will be very little. The high price that they charge, optically, really is sort of a way for them to pay for the R&D that they're spending. And also, the thing is that these drugs are going to be cost deflators throughout the system. We just saw the cardiovascular benefit added to the label. That's going to keep people out of the hospital, which saves the system money.
When we look at their market share, it is approximately 55% of GLP-1s. When we talk about Elon Musk and his genius level, we talk about, I have had every fund manager in the world come in and tell me about the moat around Elon Musk and how it's impenetrable, etc. And that has obviously been penetrated quite aggressively so far in 2024. How strong is the moat around Novo? Just how much of a grip is that 55% of the market share, or how susceptible is that to real penetration?
So we think that the moat around Novo is twofold, and this includes Lilly. We think both of them are going to remain market leaders here for a multi-year period. One, it comes down to these supply investments. They're already so far ahead of all these companies that have entered the space. We'll see data from Amgen, Astra, Roche, et cetera. And then secondarily, there's an innovation gap. Novo presented data earlier this year at their Capital Markets Day for a phase 1 drug that had the best weight loss we've ever seen. So it feels like on both those fronts, everyone trying to enter this space is going to have to do their best to catch up, and that's going to take a while.
At the same time, Manus and I had a conversation with the Novartis CEO last quarter, Emily, and they, of course, don't have one of these weight loss drugs. So naturally, as you have to ask any pharmaceutical CEO these days, is to say, are you planning on developing one? Do you feel like you missed out? His answer was really interesting, Emily. He said, if you look at the current class of drugs, you have issues that I know some people are trying to address, like Lilly, but things like muscle loss, concerns about cardiovascular issues. And he said, if he develops something like that, he wants to address those specifically. Is there not a potential for someone to come and disrupt the market and put out something better that perhaps is less risky for those specific issues?
That's exactly right. I think because Novo and Lilly have such an advantage just on the efficacy on weight loss, for example, companies like Astra that are trying to enter the space are exactly using that angle of we're coming in on the cardiovascular side. However, cardiovascular trials take a very, very long time to run. Novo's SELECT study took 5 years. So again, it still will take some time for anyone else to be able to produce the data so that they can present that to regulators.
Okay, Emily, thank you so much for that. Barclays' Emily Field, appreciate you coming in this morning. And the Bloomberg team will be speaking to the CEO of Novo Nordisk. Don't miss that, 10:30 a.m. Eastern. Okay, let's get to some other big European earnings. We got Shell out. It's getting a boost. It had a strong first quarter, and it also kept up the pace of buybacks. Let's get over to Bloomberg's Will Kennedy, who joins us now from London. So the buyback giant continues to buy back. Another strong set of earnings. Will, what was your takeaway?
It was a very good quarter, Danny. As you say, an earnings beat, strong cash flow, debt is falling, they've got capital spending under control, the giant trading business continues to perform well. So all in all, it was a very good start to the year for Shell, and emphasizes that the CEO, Wael Sawan, is so far being able to do what he set out, which is basically to concentrate on oil and gas and maximize returns to shareholders.
And just looking at the CapEx, Will, and this is obviously CapEx very much under control, $4.49 billion expenditure in the first quarter. That's about $2 billion less than a year earlier and down. So the market's going to like this kind of control narrative around CapEx because it's been the thorn in the commodity and the oil producers' side. What's your take on that?
Yes, absolutely. People do like to see that. obviously provides more money for debt reduction and distributions to shareholders, which has really been the mantra of the oil and gas industry the last few years. And it's, I think, important that companies like Shell have got through this inflationary episode without a huge uplift in their cost base, and that they are managing to do what they need to do relatively cheaply. That said, I do think one thing for the industry is that as oil and gas demand continues to rise and perhaps outperform people's expectations, there may be some questions asked about where the next projects are coming from, where they can add a bit more oil and gas. So it is an important narrative. It is a strong narrative they want to be, but I think in future quarters, perhaps we should look for it to shift just a tiny bit.
Look, just briefly before we let you go, Will, obviously we've seen quite a significant M&A activity here in the US side of the oil and gas business, perhaps less so from the Europeans. Is that another story, another narrative that may build?
Well, a lot of the activity has been focused on two things in the US, the Permian Basin in Texas, where we've seen a lot of consolidation, driven in part, you're right, by Exxon and Chevron, but it's really about bringing producers together to drive down costs. And then obviously we've got Chevron's acquisition of Hess, which is all about increasing its position in Guyana, where Exxon already is this new exciting player in South America. Now, the Europeans aren't able to play in Guyana. It seems that the US companies have a lock on that, and they're not going to be the same presence in the Permian. So they're outside of those two trends. I think while Sarwan at Shell has said that his current plans don't include any big deals. I mean, you never say never. Obviously, 10 years ago, Shell bought BG. But I don't think it's something that people are very focused on in the European sector right now.
Okay, Will, thank you very much. It's worth throwing that sprig out there. Will Kennedy on the Shell results. Now, one sprig that was to catch a whale was intervention by the Bank of Japan. So it was mooted this morning, Danny, and we now have confirmation that they spent another $28 billion. So what does that take us for the week? That takes us to almost $60 billion in intervention. I'm rounding. It's the death of Danny and I. It'll be the rounding. $28.1 billion today, plus $34 billion, so that's $62 billion. We're pretty much at the money.
And again, this is the problem. If they have to spend the entirety of what they spent in 2022 in just 1 week of intervening, what does that say about the success of this intervention? And we're likely to get more yen volatility. This isn't the last time we're going to see the yen likely pop to something like 158 versus the dollar. Every piece of hot data that's going to come in, because the Fed is so data dependent, will move the yen. How much money are they going to spend on this? Is it sustainable?
Yeah, and just a quick correction from me. That's the current account will probably fall to $28 billion.
It's something more like $22 billion they spend, man.
It's $22 billion. That's a quick correction on that. But it's about, you know, they're fighting a losing battle against a higher for longer US and indeed unilateralism. We'll have more on the story in just a moment.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep World Cup.
This is a story
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's Bloomberg Brief, Danny Berger and Manus Cranny in New York. Shall we get to some of the front pages?
A little bit of a soupçon of what's going on around the world. First up, you've got the Wall Street Journal. They're talking about Exxon setting to close to $60 billion mega deal for Pioneer Natural Resources. And that follows the agreement with the FTC not to add the former Pioneer CEO, Scott Sheffield, to the board of directors. Now, the FTC, that was set to allege Sheffield engaged in collusive activity that has raised the price of oil.
Yeah, and we know the FTC has been cracking down quite a bit on mergers.
Indeed. Okay. Understatement.
Yes. So next up in the New York Times, Manus, we have this about Arizona. Lawmakers there voted Wednesday to repeal an abortion ban that first became law pre-Roe in 1864. Two Republican senators broke with their party to ensure the final passage, and Democratic Governor Katie Hobbs is expected to sign it on Thursday.
Now, if you're one of 3,000 young people out there who applied for an internship at Tesla, it's not looking good. The EV maker has been laying off staff in cost-cutting efforts, and Elon Musk said last month that Tesla made a decision to reduce the headcount by 10%. We understand that if you're an intern or a community college applicant, it's not going to happen for you at your internship at Tesla.
I want to read what one Miami University student said because it's really sad. At 8:46 a.m., I opened a Tesla email for flight info. By 11:25 a.m., my internship offer was gone, and noted that he already spent thousands on housing. That's tough.
It is the brutal reality. So, I mean, that stock rallied up by 15% on money. It's incrementally given it back. Yeah. I mean, the rally of 15% was all around autonomous driving story in China, wasn't it?
Yes, it was. It shows the chaos within Tesla, the chaos of trying to trade this thing, and now potentially a talent pipeline.
Adam Posen joins us next from the Peterson Institute.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our global headquarters in New York, I'm Danny Berger alongside Manish Cranny. Let's set your agenda.
U.S. futures rise as the Fed Chair Jay Powell keeps the rate cut dream alive and pushes back against rate hikes. Another volatile session for the yen, according to Bloomberg analysis. The central bank accounts Japan likely conducted its second currency intervention this week. And the Apple results due later today may show the iPhone maker is coping with a sales slump. Danny, good morning.
Good morning. Can Apple earnings juice this equity market? I gotta say, strange reaction to the Fed yesterday. Initially a rally because Powell batted down any suggestion of a hike, eventually turned into losses, and yet again we are higher this morning, up about 0.5%. Two-year yield will back under 5%, a more sanguine reaction to bonds because we go from 158 to 153 in the blink of an eye. Early afternoon yesterday, around 4 p.m. We're at 155 this morning. The current account suggests that, yes, Manus, the BOJ did intervene 3.5 trillion yen, which is about $22.5 billion. So the total now 57 billion, something close to the entirety of what they spent in 2022.
Yeah, well, the debate now is that good money after bad in the face of a higher for longer Federal Reserve and acting unilaterally. Now, we spent much of the morning talking about the Federal Reserve, and the Fed Chair, Jay Powell, kept hopes alive for a cut this year while acknowledging that a burst of inflation has reduced the odds of it coming soon.
In recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. It is likely that gaining such greater confidence will take longer than previously expected. I think it's unlikely that the next policy rate move will be a hike. I do think it's clear that that policy is restrictive, and we believe over time it will be sufficiently restrictive. I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope. See if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. We just don't go down that road. If you go down that road, where do you stop?
Well, that is the Fed Chair Jay Powell. Joining us now is Adam Posen, president of the Peterson Institute for International Economics and former Bank of England official. Adam, good to see you. You've had time to chew it over. I like what Standard Chartered said about this. They said, look, he's reduced the tail risk of a hike, and he has distanced himself from that. Was that perhaps the prime objective, was keeping the dream of rate cuts alive?
I think the distancing term is right, but I'm not sure he can distance himself from the reality. So the reality is that inflation's been moving sideways. The reality is the U.S. economy is still growing very strongly. And the reality is you've still got a lot of fiscal stimulus in the system. So he can distance himself all he wants, but in the end, I don't think the cuts priced in for 2025 are going to happen.
Well, to that point, I just want to go back to what Powell said. He said if we had a path where inflation proves more persistent, where the labor market is strong, and we're not getting greater confidence, that would be the case to hold off cuts. You could literally have taken all of that and followed with that would be the case
No,
to hike.
You're absolutely right. You're absolutely right. I
So what do you make of
completely
that?
agree with you, Danny. Again, I think he's trying to say things that are not going to be supported. If you get to that point, it goes to something else he said, which is he's claiming the committee believes that policy is sufficiently restrictive. It's only a matter of time. And I think that's a mistake. I think that, 6 months, 8 months ago, New York Fed, Williams, Dallas Fed, Logan were both saying, oh, well, as inflation comes down, real rate's going to tighten and we're going to maybe have a recession. That hasn't happened. Credit conditions are still quite loose. Spreads, which are what I look at as most important, they're quite narrow. So you've got a few interest rate sensitive sectors that are just starting to show a little bit of something. And what that tells me is they haven't tightened enough.
Well, if they haven't tightened enough, then would you be an advocate? I mean, you've worked on these panels. Would you be sitting around that table and advocating, to be more open-minded to a hike?
Yeah, at a minimum, I would not have made the communications that the chair made yesterday. I mean, the chair obviously is reading the committee, and as you said, though, I mean, I would not have made the statement that said, if the following inflationary things happen, then we're on hold. I would have said it's an evenly balanced situation, or as my colleagues have said, there may be reason for a hike. And calming down markets is not supposed to be a goal here.
But to be fair, Adam, his colleague Williams, who talked about a hike, I mean, he basically said, yeah, if the data does it, then we'll do it.
Oh, yeah.
But that's like any good central banker would say something like that. But the fact we're not getting more forceful, maybe we need to hike. I think a journalist asked this to Powell, sort of a lack of disagreement at the Fed, a lack of diversity of thought. Is that a problem?
It's too soon to say that, because we have seen, to their credit, in line with what you just said, that Williams and others have changed their tune. It's a little disturbing that everything's chasing the last data point. So instead of worrying about consensus on the committee, what you might want to say is, we're roughly in the right place. When you're in roughly the right place, it's hard to make the call. If we were totally behind the curve, like we were a year and a half ago, then it's obvious what direction you want to go. But since the economy's doing pretty well, we're not yet at target, it's actually a hard call. And so instead of saying there's consensus in the committee, say the committee is split or the committee is deliberating. Again, give a different tone. If you're going to be data dependent, don't be so definitive.
You would also say not just is this economy strong, but we're going to have almost like a second boom into this election. And that's partly based on the thesis of an acceleration in immigration.
Well, my colleague Karen Dinan at the Peterson Institute has spoken about this. Other analysts have as well. The fact is, the CBO's pointed this out. We've had roughly 6 million more people come in the last 3 or 4 years than in previous years. Excuse me, not in previous years, than was projected.
Yeah.
And when you're normally having a couple million come in, that's a very big overhead. And as an economist, as opposed to a border state politician, this is an unmistakably good thing. It increases labor supply, which increases the potential growth rate of the economy, it increases demand, it on net raises the better balance sheet for the federal government because immigrants tend to pay in much more than they take out. It improves their demographic profile. Boom, 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 boom. Immigration good as long as you're an economist. So this is also ultimately disinflationary because we wouldn't be at 3.5, 3.7, 3.8% unemployment with wages growing where they are without more inflation if we didn't have this additional supply of workers.
So what then, Adam, happens if we get a president after this year who cracks down hard on immigration and stymies the flow?
It's bad news. We at Peterson are doing some modeling of this, trying to put numbers on it, but it's akin to what the UK went through initially after Brexit, where suddenly they had shortages of workers from Europe, and we would see shortages almost immediately in residential construction. We're already not doing enough in agriculture, in cleaning, in residential services, in hospitality, meaning restaurants, hotels, every short-term transport. And so then you get higher, not just higher wages in those sectors, but you have to try to bid people who normally don't want to do those jobs into those sectors. So I don't want to put a number yet. Have me back in 6 weeks. I'll give you an accurate, a best estimate. I'll give you my best estimate.
You mean you're committing to coming in again at 5:30 in 6 weeks?
I'm committing to get on Zoom at 5:30 in 6 weeks.
We'll take it.
But thank you for that. But just to say, I mean, the numbers, so I can give you a number, but I don't want to give you a number yet. But I mean, it would be, 1-2% jump in inflation immediately. And then this isn't good wage growth, right? This is like what we saw coming out of COVID, where you have shortages, and that spills over into the rest of the economy.
Well, that could be quite immediate. That could be really quite immediate in the 2025 if we have a change in regime. Can we just close off on this? I've lived through a few cycles. Danny's lived through a few less, and you've lived through a few as well. The world survived at 5%. We grew when the world was at 5% interest rates. It's a long time ago. It's okay. I'm laughing. Here we are. This market is just so desperate to return to a pre-COVID.
No, but it's not. It's not, because when you look at anything other than the equity index, right, the economy's doing well.
No, I'm saying markets are desperate, but the reality is something different. There's going to be a higher neutral rate, and we need to understand that. My apologies.
No, I interrupted. You're absolutely right, Manus. I'm getting everything wrong. There is this concept of R-star, which is the underlying interest rate the economy is at when you're at full employment and target inflation. It's an abstract concept, as Powell has rightly said. You can't measure it, you can't taste it. But anyway, there is a basic idea that you live in a low or a high interest rate world. And there's a lot of reasons to think that we were in a very low interest rate world from roughly 2004 till COVID. And then the question is, things shot up temporarily, but it doesn't stay up. And in my view, R-star stays up. We've got a lot of fiscal in the pipeline. We're going to spend more on defense. We're going to spend more on green, I hope. We're going to spend more on industrial policy, unfortunately. And these are chunky numbers. This is like, as Larry Summers has said, this is like running the Cold War drawdown in defense spending in reverse. We've got arguably an increase in productivity. It has to be an increase that's ongoing, increase in the trend rate of productivity. And we've got potentially, if Trump doesn't start deporting human beings in the millions, we've got a bigger population and a younger population versus what we had. So you put all that together, that should drive up the interest rate. That should drive up the cost, the return on capital on average in society, and that's your R-star. You also put in a little bit for continued inflation risk. And so, this is the reality is an R-star, which brings us back to the Fed decision. The Powell Fed has said this. I mean, in the last dot plot, they raised their 10-year, their projection on the 10-year Treasury 25 bips, which isn't anything, but that's going to keep going up.
Okay, Adam, we're going to turn to the rest of the world shortly, so stay with us. Adam Posen of the Peterson Institute of International Economics.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper.
I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
You're watching Bloomberg Brief. Danny Berger and Manish Krani in New York. Now, we're tracking the yen this morning. We got the data from the BOJ, the current accounts. It points to yet another round of intervention, this time 3.5 trillion yen, which is about the equivalent of $22.5 billion. We're back with Adam Posen, president of the Peterson Institute for International Economics, who's also a former Bank of England policymaker. Adam, if you add these two figures up together, 35 on Monday, 22.5 billion, you get something close to what they spent for the entirety of 2022. And what we have to show for it is about 156 on the end, something that looked like what we saw last week. So perhaps little reward for a lot of money. Are they throwing good money after bad?
They're still only throwing little money. Try to have a bit of perspective on this, Danny. I know you're absolutely right. They didn't do much the year before or the year before that because they haven't been intervening. But if you go back several years, so like when the Chinese renminbi was crashing down in the second half of 2015, they ended up spending $1 trillion of reserves. So 50 times what the Japanese yen did. So it's not yet big money. Now, the more important point is there's a tension, and you and I and Manis were talking about this during the break. There's a tension between BOJ Governor Ueda coming out, as he did at the Pearson Institute a week ago Friday and the Diet last week, saying monetary policy is not driven by the exchange rate. The exchange rate's not a target of monetary policy. We're ready to raise rates, but we don't have to do it quickly. I'm paraphrasing.
Right.
Yeah. But you know, and the intervention. And so either the BOJ's policy statement isn't as strong as it sounds, or the intervention isn't ultimately going to work because monetary policy isn't going to move. And I think it's more likely the latter. Monetary policy doesn't move, so intervention doesn't work.
I mean, one could say that the language used and then the action taken, he's been undermined. You say that $1 trillion is what was spent before. Do you think it takes more than unilateral action this time around? It's a different world. We are dealing with a different Fed at a different moment in time in a different regime, a different global regime. They're not getting their bang for the buck. We know that they've got to spend up to $1 trillion maybe to be equal to that. But do you need tripartite intervention? Do you need G2, G3 intervention to materially shift yen?
It's necessary but not sufficient. So I agree with you. We're in a world where secular trend, going back to what we said about Powell before the break, Fed is not going to cut, in my view, in 2025 and 2026 anywhere near what people think. And so what's already the secular dollar uptrend is just going to continue. And then if you get fiscal laxity from the new president, and depending on how the Congress looks, you get a further short-term boost. So, you know, you're looking at something more like the late 80s, as people have started to say, is this room for another Plaza Accord? And that gets us to the question of multilateral or group intervention. I think if you're going to do intervention, it's much more effective if you do it as a group. I think since Lael Brainerd, who's now, of course, at the White House, but was Treasury Undersecretary, negotiated this sort of G7 plus China deal that you don't unilaterally intervene, you get permission. So Japan clearly has permission,
right?
But that's not enough. But my concern is it's the same dilemma as I was just saying about Japan. The Fed, unless you really believe the Fed's going to be cutting more than it now is, you can't intervention alone isn't going to stop dollar strength.
And it's something, you were at the IMF meetings, the spring meetings in DC, something that the world and especially emerging market central banks are coping with. They're maybe nearing the end of their rate cutting cycle. Is that cycle going to be stopped short because they now have to think about the risks of currency depreciation?
That's a really good issue to raise, Danny. And the concerns of not just small open economies, but like Korea, which on fundamentals should be strong. And Korean, what we did have this tripartite announcement around the meetings of the Korean, the Japanese, and the American finance ministers all saying, you know, we're watching this. So these concerns are there. But my forecast is just that it's just going to get worse because it's not like the American government is going to do anything this fall close to the election. So the pressure on EM, the pressure on small open economies will continue.
We're going to squeeze one Bank of England question out of you because obviously that is where you sat, and we're up against the clock here. Again, Hugh Pill says we're on Table Mountain. He's reluctant to come off that. A reasonable way to go.
Sorry, we're on.
Well, last August he said we were on Table Mountain in terms of rates. He was in South Africa.
Yeah.
Not the Matterhorn.
Got it.
But again, we're just curious in terms of if the Fed does not have the ability, as you say, to cut as much as the market thinks this year and next year, what about the UK? Just wrap it up with a bow for us.
The bow is the UK has surprised me on the upside in the sense that growth has been stronger, but inflation has come down more than I expected. And so I was worried the Bank of England was going to have to go up from Table Mountain, but I think they're going to be able to stay. The important thing is if the ECB moves, then there's space for them to move.
Everybody's got to make space along the way, the shuffleboard. Adam, great to see you, and welcome to Bloomberg Brief. That is Adam Posen, Peterson Institute, International Economics, our guest this morning on monetary policy. We'll leave you with a snapshot of the yen.
Yep, there we go. Yen weakening down 0.5% after around more of $57 billion has been spent in this week. Adam Posen says, small change, could be more. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger alongside Managed Cranny in New York. Let's get you set up for your trading day. Some economic data. We're going to get U.S. factory orders, trade balance, and initial jobless claims all at 8:30 a.m. Peloton, Wayfair, and Moderna all report their results before the opening bell. Then after the bell, we get Apple, the latest Mag 7 stock to report earnings. Manus.
Yep, let's see how those sales actually did do in China. Now, have you been cooking rather than ordering from DoorDash? I think Danny has. It offered a disappointing profit forecast for the current quarter. The company investing in expanding its list of non-restaurant partners and improving efficiency. The market does not like it. eBay down 3.25%. Gross merchandise sales also missing. And then you've got Qualcomm. I mean, the chips got really beat up yesterday on AMD, but they gave an upbeat forecast on sales and profit for the current period, suggesting that handsets are increasing after a 2-year slump. Danny.
Well, as I said, Manus, we are going to get Apple after the bell today. It's going to give investors a sense of how the iPhone maker is doing. We've had some bad reports on China. Let's go through it all with Bloomberg's Alex Webb. So, Alex, just for now, putting the China issue aside, or maybe that is the main issue, what do investors want to find out?
Yeah, I think China is very much top of the list. There has been reports or estimates that their sales in China might have fallen by as much as 30%. IDC estimates their global sales have fallen about 10%. Now, that doesn't directly correlate to, say, a 10% decline in revenue because they have a higher average sales price than many of their competitors. So even as the number of units they sell might have declined, they don't actually release those numbers themselves anymore. They are often able to push the price of the units they do sell higher. Now, there are other things investors would like to know, but they are unlikely to find out today, particularly when it comes to AI.
Well, what is it that you think that the market believes they can deliver on AI, or at least intimate about AI?
Well, look, they'll probably make some broad comments about having lots of stuff in the works on AI, being very confident about what they're able to do. The real announcements and vision on what their roadmap looks like will come at WWDC, the Worldwide Developers Conference, which is happening in a few weeks' time. That is when you'll have a real sense of what they're getting up to and actually on what level they're going to be competing with the likes of Google and Microsoft, who are really leading the charge in that space right now.
Alex, thank you very much. Alex Webb, all eyes down on the Apple numbers. There is only one story in town. It's in the FX narrative. Danny and I just sat down with Adam Posen from the Peterson Institute. We need to understand at the moment the Bank of Japan are throwing peanuts at the gallery of intervention on a relative basis. And I'm not being facetious because Adam quite rightly reminded us when it comes to size and scale of intervention, Japan has got deep pockets, up to $1 trillion, which was intervened in the 80s. And unilateralism, in his words, is not going to work on it. It's not going to work.
Because this time around, it's $57 billion, which I said to him, Adam, I mean, that's almost the entirety of what they spent in 2022. And he rightly said they've spent $1 trillion before. But the thing he lined up, Manus, is even if they spend $1 trillion, that's not enough. And it is an issue, he says, it's going to get worse, not just for the Bank of Japan, but for emerging market central banks throughout the world, banks like Korea. Again, it's only going to get worse because the Fed is not ready to cut. Jay Powell made that clear yesterday.
And a very clear message from Adam Posen, which was the message delivered by Jay Powell wasn't one that he would have delivered himself, which was closing off or trying to close off those reasons to a hike. He should have retained more optionality for himself and for the board.
Well, the fundamental difference, though, is that Powell thinks that rates are sufficiently restrictive. So he doesn't want to say something that sends bond... Exactly. So Powell doesn't want to say something that raises bond yields, whereas Posen says they're not restrictive enough.
No. That's it for Bloomberg Brief. Surveillance is up ahead.
looking at your portfolio of businesses, it is about resilience. It's about pressure. It's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Lost. Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group, where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
I do think it's clear that policy is restrictive. I think it's unlikely that the next policy rate move will be a hike.
The whole game plan is basically unchanged. We're going to keep rates here until we're highly confident that we're going to get inflation down to 2%.
We have seen an acceleration. It's probably overstated, but we've got to see where we're going.
Here is a Fed that's telling us, look at the longer term. Look where inflation was and look where we've gotten it to.
I worry that the Fed is not going to end up cutting because they're going to be so data dependent, so reactive, that they're not going to look at the weakness that's coming.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your morning started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Your equity market on the S&P 500 bouncing back from a strange day of losses on the S&P 500. We're positive here by 0.6%. We said this yesterday after Chairman Powell spoke in that news conference. That presser ended almost as soon as it started. The top line, the headline, Bramo, we think we're restrictive and nothing else seems to matter.
Taking off the prospect of rate hikes. To me, that was basically taking away any tail risk of them actually becoming even more restrictive and repeating that they're on the right path. To me, that was the entirety of what was accomplished. Whether it was more dovish than the market was pricing in, it seems like this puts it back to where it was before, which is essentially it's in earnings hands, and then it raises this question of, okay, on the long end, how much is inflation going to reaccelerate?
Let's go through the reaction from the South side as well, Lisa. So Citi said the Fed will cut as soon as the data allow. We'll catch up with Andrew Hollenhorst a little bit later this morning. Bank of America and Mike Apen. Powell is in wait-and-see mode. This from Jim Reed of Deutsche Bank. AMH, it's hard to say it was a dovish meeting, but given the recent inflation prints, it could have been a lot more hawkish. I think it's difficult to disagree with that take.
Absolutely. It felt very dovish. Powell said there are paths to cutting, there are paths to not cutting. It really depends on the data. It felt very British. Keep calm, carry on, wait for the confidence in order to get there to cut. But what he did mention is pretty much that hikes, very unlikely. Doesn't seem like this Fed sees a path to hiking rates. I love what Stephen Stanley at Santander said, though. Maybe it was just me, but did it seem that Chairman Powell's press conference today set an all-time high for awkwardness and an all-time low for information content? Stanley thinks the questions were good, they were precise, it was just Powell that was obfuscating.
I'm pleased that Stanley said it and Lisa doesn't have to, because I know that some people felt like that in the press conference. At the beginning, the immediate exchange in the early part of the news conference, when he was asked about being sufficiently restrictive, pointed to evidence of it in the labour market. Now, this is going to be interesting for us going into payrolls tomorrow morning. 3-month average for payrolls is 276,000. The estimate tomorrow is something like 240. And I can pick big bank after big bank that is going with 250. Goldman as high as 275. It's hard to see it in those headline numbers we're expecting tomorrow morning.
But look at the JOLTS quits rate and just take a look at the beige book, because evidently they're more important than the labor market report that we're going to get tomorrow, because that was essentially the tone that we got from what Jay Powell said. You mentioned Citigroup. Andrew Hollenhorst, who's coming on soon, still sees 100 basis points of rate cuts this year.
4 cuts.
So this raises this question, to your point that Jim Reed raised, was this just less hawkish than he could have been, or less, in terms of just not necessarily pushing back? Or is this actually a dovish position where they're looking for any excuse to cut?
So let's go to the price action. So the S&P 500 higher by 1.2%. The peak of that news conference, then it just fades immediately. Totally fades going into the close, and we end up being down by a few tenths of 1%. On top of that, not just the equity market, really interesting moves in foreign exchange as well. I think the time was about 4 a.m. in Tokyo, and all of a sudden, dollar-yen gaps aggressively lower, Lisa, off the back of what we now believe is more intervention from the BOJ.
$22.6 billion of it, to be precise, as they tried to take advantage of a window where they saw maybe a bit of a reprieve on the U.S. side that they could come in. What does success look like for the Bank of Japan? If it's to stave off some of the currency weakness, well, they didn't succeed. If it's to blow out the shorts to actually create some anxiety about how far you can push against the Bank of Japan and how far you can push against Japanese authorities, then they might have won. We'll see what the losses look like.
Dollar yen right now, 155.24. Coming up this hour, fantastic conversations lined up with John Stolfus of Oppenheimer as Fed Chair Jay Powell sticks to a dovish script. Bloomberg's Alex Webb with Apple earnings on deck. Those earnings coming a little bit later this afternoon. And Citi's Andrew Hollenhorst saying the Fed can still deliver 4 rate cuts this year. We begin with our top story. Bond yields easing as Fed Chair Jay Powell calms fears of another rate hike. John Stolfus of Oppenheimer saying this: the operative phrase in our view is for rates to remain at current levels for longer than expected, rather than for rates to move higher for longer. John is with us around the table. John, good morning to you.
Good morning.
Is the Fed put alive and well after that?
You know, I think it is, at least for now, and that can change from day to day as Fed speak follows all this. And the market keeps digesting what occurred yesterday. But we weren't surprised, you know, we like most of everybody, we didn't expect any kind of change in terms of rates. But I think there was greater clarification. If anything, I think we're at a point now, John, where the market is beginning to get it, that it is, you know, normalization of interest rates. There will still be the argument that the Fed is still too tight in terms of the economy. But that usually would be coming from highly leveraged players who are just still in shock from the change from an environment where the benchmark rate was 0 to 0.25 and now 5.25 to 5.5.
We had Mohammed Al-Erin on the program yesterday, and he was pointing more towards what companies were saying and less towards what Chairman Powell was saying. Some of the cracks that are starting to emerge in places like McDonald's, in corporate America, places like Walmart, Starbucks. Now, you can pick individual reasons for individual companies as to why they're struggling. Are you pointing to that as maybe early signs of difficulties in this economy?
Less of early signs of difficulty, but more being what is happening now is reflective of what the Fed has been doing for the last 2 years. And so leading to an end of the tightening cycle is where we're headed. And so the other side of this will be some relaxation. It's still, we don't think rates are going back to where they were during emergency standards for the last most of the last 15 years between the GFC or Great Financial Crisis and the pandemic and then the fallout of that. But it's a normalization process, and we've talked about it a lot, things in the perception of what is a high interest rate and what is really a realistic interest rate where bond buyers get something in return and bond issuers have to pay for the privilege of borrowing money. Sounds healthy to us. And we're stock guys, okay?
Well, okay, so it sounds healthy to you, but basically you're endorsing the idea of long and variable lags. You're basically saying you're seeing it work through in the form of some of the commentary you've heard from some of these companies. Does that make you less optimistic about total returns later this year, or do you just sort of see this as the market waking up to what you've been saying all along?
I think the market is waking up to what we've been saying all along, which is highly flattering, but also you don't want to get too positive because, you know, it's the market will always show you it's like being a tiger trainer. You don't want to turn your back on the tiger, and you want to avoid hubris at all costs.
Okay, so what we're looking for after the bell today is Apple. The last of really the big tech names before NVIDIA reports later this month. There is a real question about the consumer-facing types of tech names. We've seen real distress. We've seen more disproportionately in the likes of Amazon, which deal with small businesses, et cetera. How much of a watershed moment will the Apple earnings be given all of the angst around this name?
Well, as you know, because I manage money for Oppenheimer, they don't let me talk about specific stocks.
Just
but
talk
I can
about a
certainly
stock
talk about
that sells a major smartphone that most people use.
Most certainly, they are caught in a transition of going from a major part of their sales is now beginning to disappear as a result of ideological differences with a country in many ways, policy in China. And that's a natural thing, but they're led by Tim Cook. He's been shown to be a remarkable business leader. Steve Jobs, I think, really picked the right guy for the job. And that's, you know, if a company has an understanding of innovation and how to foster it, we kind of think you don't want to jump to fast negative conclusions.
You say you want to look at industry and sectors, less stock specifics, but you like cyclicals still.
Oh, still like cyclicals very much, and we think you need to be exposed to technology because it's the big story here, and it's one that is not only secular, but is cyclical and can help all 11 sectors.
But when we see these moments of pullback, is that moments for you to then say, buy more and get even deeper into that trade?
Well, we're not big buyers of the dips, but we're big buyers of babies that get thrown out with the bathwater. So, you know, we like growthier value and we like GARP technology. GARP growth essentially are those growth companies that are deeply embedded in the lives of both the consumers as well as business, where we're all on the upgrade cycle in some sense, whether we resist it or not. You know, it's. I just found out one of my phones would no longer adapt to the Delta Airlines app. So
Why
I had
is
to.
that?
Fortunately, I hadn't. It was because it's too old. I got a
Got to
6.
upgrade.
Pardon?
You're the problem with Apple earnings later.
But
That's why you don't want to talk about it.
But I do have a 14. I have a 14 for business, and for personal, I had a 6S. So now I'm being forced to upgrade.
So
That's neither an endorsement.
Oppenheimer pays for the iPhone, the newer one, and you're going with. I can see what kind of guy you are, John. John, you said something interesting there about helping the other 11 sectors. I want to talk about that a little bit.
Sure.
Mike Wilson of Morgan Stanley's on top of this theme as well. The difference between AI enablers and AI adopters. When do we start to focus a little bit more on the latter and not the former?
I would say I think that change is imminent in the sense that AI adapters are likely to become more recognized going forward. I think AI as it exists today is already helping companies navigate a very tough environment, a transition in terms of...
Could you give us an example of that? What's that going to look like?
Well, what it'll look like is when you see value stories that adapt AI suddenly become more attractive to investors. And you begin, and we've already begun to see value beginning to perform better, and it's not just on a defensive position. It's just that the benefits of what the growthier aspect of the market within the sectors produces is beginning to help the value companies.
Is this banks operating with fewer people, making more money with less?
It is, and it's also the next thing we would presume would be like any adaptation of technology will be new jobs that'll be needed because humanity, just think in terms of just really primitive AI that we have today, you know, anytime you call an insurance company or any kind of a provider to get some information, you have to fight that auto voice that tries to tell you how much they value you and tries to sell you all kinds of stuff.
And now we just won't know the difference if it's a robot or a person. Is that what you're saying?
It's because when you get to the person, though, you say, thank you for being there. And please tell your bosses that the person who called remains a customer because of you, not because of the robot that tried to keep me from talking to somebody.
I feel like we're getting a very intimate look at your, personal struggles when you go home.
I'm afraid so.
Yeah, this is something that
this
goes
was the
really
phone call
deep.
with Delta yesterday.
Yeah, exactly. When he was talking
iPhone
about
6S.
Right, why won't you let me upgrade? I'm sorry, sir, you don't have a high enough level for us to talk to you with a human. I am wondering though, you've been working for almost 2 weeks straight, talked to a lot of clients, not taking any time off, at a time where a lot of people are saying nothing's changed. What's keeping you so busy?
Well, what's keeping me busy is I want to be assured that indeed nothing has changed. I'm always looking for surprises. 40 plus years in this business, this is going to be my 41st year, just teaches you that you never know what's coming around the corner. I'll never forget when Jonathan asked me, he said about 2022, he said, well, looking back, what did you learn? And what I told him was anything can happen. Since that time, I've also added that also the power of a negative pitch book can be significant. Because remember, in 2022, we didn't have a huge surge in unemployment. We didn't go into an earnings recession. We didn't see all the things that bears were talking about. We just got through things.
22 was a tough year for big tech. I remember that conversation. You had a much better year in 23, I'm happy to say. John Stolfus of Oppenheimer. John, thank you. Great to catch up with John the day after the Federal Reserve decision. Equity futures right now on the S&P 500, positive by 0.6%. Let's get you some stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Tensions remain high on college campuses nationwide as pro-Palestinian protests continue. Police are taking action to break up protest encampments and clear out occupied buildings. Demonstrators are asking schools to sever financial ties to Israel and grant amnesty to students for rule breaking. The Associated Press has reported more than 1,600 arrests at 30 schools since the protests began at Columbia in New York 2 weeks ago. Novo Nordisk raising its annual profit outlook as more patients get on its weight loss drug Wegovy. The drug maker saying more than 25,000 patients are starting on the treatment each week in the U.S. That's compared to 5,000 back in December. Shares fell in trading in Copenhagen but have surged more than 25% this year. Shares of Carvana are surging in the pre-market. The used car retailer posted net income of $49 million. Analysts had expected a loss of $116 million. Vehicle sales grew for the first time in 6 quarters, and the results could be a signal that the once nearly bankrupt company is moving past its restructuring plan and into a growth period. That's your Bloomberg Brief. John?
Yahara, thank you. We'll catch up with you in about 30 minutes' time. Plenty of conversation around this desk about Novo Nordisk. More on that a little bit later. Up next on the program, One Gear, Davish.
I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. Demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago.
That conversation just around the corner, live from New York City this morning. I'll get my words out. Wow. Live from New York City this morning. Good morning.
On the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
Oops, we did it again.
We have a strong economy. Labor markets are tight.
We have to question, can the economy stay this resilient?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The jobs market is not deteriorating.
How long can that story keep holding for this Federal Reserve?
It's the source of this strength. We could debate it all day.
The April Jobs Report, Friday on Bloomberg.
I've rebooted, I think. Equity futures on the S&P positive by 0.6%. Yields are lower by a single basis point. 461.19 on a US 10-year. Under surveillance this morning, one gear, dovish.
I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down.
So here's the latest. Treasury's climbing across the curve, with Fed Chair Jay Powell saying policy is restrictive and downplaying the possibility of a rate hike. Investo's Christina Campmany writing this: we think with an extremely high bar to tighten policy further in the US, there is value to own the front end around 5% and also see value in real yields in the US around 2.25. Christina joins us now for more. Christina, good morning to you.
Morning.
What did you make of that yesterday, that news conference with Chairman Powell?
Look, the market has been very excited about the possibility of hikes, and I think he closed the door on that tail very clearly yesterday. He didn't want to entertain it, and he laid out many scenarios. There's a scenario that we stay on hold longer, and these are the conditions where we ease, but it was a very closed door on the other side, and I think that that's relevant for that value in the front end.
We'll speak to Andrew Honhorst of Citi a little bit later this morning. As Lisa mentioned at the top of the programme, he's still looking for 4 cuts this year. We were having this conversation after the news conference. How low is the bar? Just to reintroduce a conversation about rate cuts this summer.
Look, I think July is harder. So Powell yesterday again said, we didn't want to react to 1 or 2 data prints, but now that we have a full quarter. So you see that they need at least 3 data prints to kind of change, and potentially more. And I think there's still more focus on the inflation front. So you do have 3 inflation prints before July, but I think you have to have overly convincing evidence the other way. So can September certainly be on the table? Yes. But I think they've just lost their confidence in how quickly they'll be able to get there. So again, I don't think that there's a case for hikes. We think that the next policy movement, really globally, except for the BOJ as an outlier, is to easier policy. It just is delayed until we have this confidence.
Were hikes just a fantasy of the market looking for something to talk about, or were they actually something that people thought might be warranted given the inflationary pressure under the hood?
It feels like a little bit of the first. I think markets get excited about swinging from one extreme to the other. We have a lot of the conversation of if you hadn't been here and listened to the Fed rhetoric and all of this, and we bought into what Powell told us in December and listening to the nitty-gritty, and you just looked at the data, it's hard to come up with a situation why they would need to ease as much as the market was pricing, even what the dots say or what the market was pricing in January. But I'm not sure we have the case the other way.
The reason why I ask this is because we were playing around with the idea, well, if you take off the prospect of a rate hike, and if you clearly have an easing bias despite some of the hotter than expected data, does that really create a pressure for the long end of the yield curve? Essentially what you get is this feeling that this is a Fed that wants to cut rates, even if inflation is still running hot, which really raises questions about the long-term risk premium that you have to charge.
That has been our spot-on thesis for probably the last 6 to 9 months. And I think that is the point of the rates market that has been mispriced, and there needs to be more premium in the long end. The curve has been so inverted, and the market has given tremendous credence to the Fed and its ability to fight inflation, but inflation has been stickier. So I think we do need to see higher long end yields. And I think part of this argument about the steeper curve, and it's been a very well subscribed in the market, is that it's not just the Fed eases and you get a steeper curve that way. It's a repricing of both. That long end yields need to be higher, and there's still some value in the front end because we don't see a case for hiking from.
We were hearing this from Earl Davis yesterday of BMO Capital Markets, where he was saying he's looking for the 10-year to go to 5%. Then he's an aggressive buyer, but he doesn't think it's going to go much above that. And frankly, it's probably going to hover around there. But at that point, it really creates some restrictiveness in the economy. Is that kind of how you view things as well?
Yeah, I think so. I think in the fall, the kind of bond vigilantes got excited about, do we need to talk about 6.5% 10s? I don't think that there's a case for that, right? We can reprice a bit, and around 5%, you have more balance in the market. And I think you also have to take into account there's been a tremendous amount of flows into fixed income product that has kept a lid on yields, even in spite of fiscal spending, inflationary concerns, all of very tight corporate spreads, but there's been money that's been put to work there.
Can we discuss balance sheet runoff? It's amazing that QT comes up in the news conference and people have barely talked about it. What is going on?
I think that that's by Fed design in many parts. They've worked very hard to separate the two, as our primary monetary policy tools is policy rate. And this is, we want going on in the background. They're like famous, this is paint drying, watching paint dry. I think the adjustment is a lot more about fine tuning so we don't have balance sheet issues as we did that September in terms of kind of stresses in the market and trying to ease it.
The thing I struggle with is that QE is meant to be somehow bullish for risk assets and QT isn't.
A non-event.
And then some people say that capping off or tapering QT is bullish again. I can't figure it out. What's it meant to mean?
Look, I think, so if you go back to the economics conference that was a few weeks ago, and you had Lazzetti and a few other people do that paper on the impact of QT across all these markets, and like the conclusion is that QT has a 3 to 5 basis point impact and QE has this massive, but that's by design. And they talk about the point of, and I think Waller spoke after, but they talk about the point of when we do this, we only do QT when we think it will have no impact on the market. So I think like that's their goal in many ways.
So it's largely psychological. It's basically what we're saying. It's about how we sort of perceive it to be based on the communication we get from the FOMC.
Your confusion really highlights the confusion that everyone has, where nobody can really understand the effect of quantitative easing or quantitative tightening on the market. This has been a big mystery that people also are trying to make dramatic, and they have been unable to do so. At some point, though, this is sort of the suspicion that it is the reason why you have not seen liquidity truly drained from the system, because it has not shrunk consistently enough.
Christina, just a final question. We'll get a ton of Fed speak through the next couple of days following Chairman Powell. Do you think Chairman Powell represents the consensus on the committee, if there is a consensus, or do you expect to see some differences in the days to come?
I think we've seen a lot more divergence in the Fed speak, and I think that that probably continues. And Powell has kind of anchored himself as one of the more dovish members, and kind of even yesterday, you guys were talking a lot about people were looking for a very hawkish Fed.
Sure.
But we had already moved that way, right? The pricing had moved, we'd taken it out, and there's nothing exceptionally hawkish about his message. He was saying, this is the data we've had, we've marked to market. So I do think that some of the speak that we get going forward from other committee members will be a little bit more hawkish than that.
Christina, thank you. Christina Campmany there of Invesco. We talked about it this time yesterday morning. Hawkish, relative to what? Now, relative to the last meeting, I mean, kinda, yeah. Relative to market pricing, that was a high bar. Absolutely not.
And this is a Fed president who basically came out and said, yeah, no. Basically, we're fine, we're good, we're confident that we're on the right track, and I think a lot of people are surprised by that.
Big earnings story a little bit later this afternoon. It's on to Apple. We'll catch up with Bloomberg's Alex Webb, with investors looking for earnings to maybe hit a bit of a soft patch following difficulties in China. That conversation next. This is Bloomberg.
top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
So here are the scores. Let's see if they stick. Right now we're positive by 0.6% on the S&P. On the Nasdaq 100 up by 0.8. On the Russell, the small caps up by 1 full percentage point. Now, I ask, let's see if it sticks, because yesterday at one point the S&P 500 was higher by 1.2%. And Lisa, into the close, negative a third.
Did you understand why?
Nope.
Okay, neither did I, so I can't really say anything
I
about
could make
that.
up a nice little story about how people had to cover shorts as Chairman Powell was speaking, stocks went higher, then people went short again. You know, like, but that would be a lot of BS. I've got no idea what happened yesterday, all right?
I'm so glad that you don't, because I was looking for a reason and I couldn't find one either. Maybe it was the Bank of Japan and they kind of stepped in and they also had an influence on the stock market. I don't know. We don't know.
I'll tell you the inconsistency, and it's this right here. It's in the bond market. So if we'd seen the bond market fade as well, okay, like something's happening, but we didn't. Yields were lower on the session, and they're lower again this morning by 2 basis points at 4.93 on a 2-year.
Which is strange on every level, because basically what we just heard from Christina Campmany and what we heard yesterday was the bigger risk here is actually to long end of the yield curve. It's not to stocks, because stocks are in the same place they were before the press conference. The big risk, the tail risk, was the potential for a hike. That was taken off the table. For bonds, if they're not hiking rates, if they potentially are more easy than people thought, well, what does that mean for long-term inflation?
Got to update the stat from Alan Ruskin as well over at Deutsche Bank. He said that the 2-year note had rallied on all of the last 4 FOMC days. Alan, you can make that 5. It's 5 now.
It rallied the most. The 2-year rallied the most since the last Fed meeting.
Yeah.
That was exactly the statistic that people were looking at, which gives you a sense of the inability for Jay Powell to be a hawk.
Chairman Powell in one gear. We said it on this program yesterday. Nailed it. In the FX market, we looked like this. Dollar yen, 155.32, positive by 0.5%. Now, yesterday, just amazing. 5 a.m. Tokyo time, staying up late. I don't know, getting up early, maybe. Pick one. Over in Japan, this market moved big time. Dollar yen yesterday, gapping lower by as much as 3 percentage points at one point, closing lower by something like 2%. So that's the biggest move we've seen on dollar yen lower all year. Yen strength. And what we understand based on the accounts coming from the BOJ is we got more intervention.
Which basically was them saying, okay, Jay Powell was of Dove. Let's go. We're going to take this opportunity and use it for all we can. What were they trying to achieve, though? And this really is the key question, because if they were trying to actually stave off the weakening, well, that's not going to work with $22.6 billion of intervention. But if they're trying to squeeze out shorts and create pain to possibly threaten them from doing it again, maybe that's what they were trying to do.
Dollar yen, 155.31. Under surveillance this morning, Treasury's gaining as Fed Chair Jay Powell sticks to a dovish script. Powell downplaying the chance for rate hike despite saying it would take more time for current rates to lower inflation. Traders looking ahead to US payrolls and comments from Fed Presidents Goolsbee and Williams tomorrow. So we've got the data, and we get more data this morning, by the way. 8:30 initial jobless claims. Then on to tomorrow morning, Bramo, payrolls.
Yeah, you know, I'm actually very interested in the data. I'm less interested in the Fed speak because honestly, at this point, I don't know what they could possibly say that would materially change the market's perception. What I want to understand from the jobs report is the actual wage increases, not just the headline numbers, but get some of the internals to understand whether this is just some of the lower quality jobs being added or whether there's a broader kind of wave.
I'm interested in the jobs report after hearing what Bob Michael had to say to you two yesterday around this table about the fact that if they do see an unemployment rate 4.something, 4.2, 4.3, that could potentially be enough for the Fed to actually say, okay, we're ready to go in and make that cut.
The guesstimate tomorrow is 3.8%. Previous numbers, 3.8%. Mentioned the headline estimate, 240 in our survey. The previous number, 303. Elsewhere, Bloomberg reporting the FTC is set to approve Exxon's $60 billion purchase of Pioneer. People familiar with the matter saying a decision could come within days. The deal would create the largest producer in the Permian Basin. Chevron, Occidental, Chesapeake Energy, all of them still have large takeovers under review. Shocker. We might actually get a deal approved.
And in the oil and gas industry, which we have seen this administration be what they would call the oil and gas industry representatives hostile. This comes down to the fact that Exxon, with this deal, is saying that they will not allow Scott Sheffield on the board. And if our reporting is correct, the FTC found evidence that Scott Sheffield sought to communicate with OPEC members when it came to things about oil pricing and output. This is according to our reporting. And if he's not going to be on the board, that really set the path for the FTC to say, okay, we're going to greenlight this deal.
I wonder if this administration is hostile on the surface, but under the hood is very happy with the Permian Basin right now, is very excited about production because it's offset a lot of geopolitical concerns with 13 million barrels a day being produced. I wonder how much this is deliberate. It's not in spite of hostility. It's actually because they are not hostile behind closed doors because this is bailing them out.
They're thrilled about it. It's why Secretary Granholm's walking around with a big smile on her face. You know, just thrilled, but won't talk about it.
Well, I mean, it's
sort of happy, but won't talk about it.
Exactly. It's like, no, this is bad.
She didn't mention it to you at the White House Correspondents' Dinner?
We didn't talk about it directly, no. No conversations about that. It's one of those things, isn't it? What are you so happy about? I'm not going to tell you.
But it has to do with something
13
that rhymes with Exxon and Pioneer.
You know, 13 million barrels a day.
I like the number
being
13.
Produced in America. It's your favourite number, lucky 13. It's amazing, isn't it? You're producing 13 million barrels of oil a day in America, more than Saudi Arabia, and no one in the administration likes to talk about it.
They don't like to talk about it front-facing in public, but behind the scenes, some of them definitely like to talk about it.
Yeah, but John Kerry actually, when we were in Davos, he said something that I thought was really honest, which was basically this is a necessity. This is a policy of necessity. It's not necessarily a policy of desire. And that actually is a coherent message that if they really put out there, I think a lot of people could get around, but there are certain factions that probably wouldn't like it anyway.
Isn't that the problem, though, with politics? It's why all three of us can't stand it. They won't say things that actually the average person in America would actually sit there and say, okay, that makes sense.
Yeah,
cool. They just want to entertain the fringes.
But talk to them behind closed doors, and they're smack in the middle. So then this raises this question of what are we doing?
Right now, we're going to talk about Apple, Bramo. Keep up. All right, set to report earnings after the closing bell. Investors looking for investments in AI and details about iPhone sales. This morning's going to be fun, right? And demand waning in China too. It will also be the first official report on sales of the Vision Pro. Bloomberg's Alex Webb has got himself together. He joined us from London for more. Alex, let's go through this earnings report out a little bit later this afternoon. What are you looking for?
I think China. China's really what this is going to be all about. The expectations are pretty low about what's going on there. There were some reports a little while ago that maybe unit sales in China had fallen by as much as 30%. The overall global unit sales might have fallen by 10%. Now, that doesn't directly correlate to earnings, of course, because Apple is often able to eke a higher average sales price per unit out of the units that they do sell. There will also be any commentary around the Vision Pro. Again, expectations not particularly high with that, not expecting to sell many units just yet, and they would love investors would love to have some comments about AI. I think most likely is they'll issue some sort of generic comments about having big ambitions in the space. The real time we're going to learn about AI is at the Worldwide Developers Conference that they hold in just a few weeks' time.
Well, let's stay on that, Alex, because there's been this theory that Samsung actually could get a leg up on the impenetrable iPhone market just simply because they are going to come out with an artificial intelligence infused phone later this year. Do you think that Apple has to respond to that, has to give a time frame in order to get people enthusiastic again about the potential for their growth?
Well, I mean, usually if they are announcing things at WWDC, that's the investor conference, that usually means you're going to be seeing something when the new operating system is released to the general public alongside the new iPhone come sort of September time. So I think, depending on what we learn there, we will have a clear sense of then what is coming down the pipe. We have Bloomberg News has reported that Apple has been in conversations with Google about potentially using some of its AI functionality in Siri, in its smartphone, so it's kind of hardwired in. That would be quite a significant admission, a tacit admission of Apple's own defects in that space if it were to happen. So I don't think necessarily in this one there will be such a slow mover because they might have third-party agreements.
I don't want to draw too many parallels between Apple and Tesla, totally different companies, but they do both rely on China in a pretty significant way. And I'm wondering if we can get a signal, or if it's just sort of Elon Musk, that he really kind of snubbed the Indian Prime Minister Modi and went over to China to talk with Xi Jinping and try to appeal for a better business opportunity there. Do you think that Tim Cook is going to take the same approach at a time where he's been expanding production in India and talking about even lower cost phones that could potentially target that market?
Yeah, so I mean, the challenge is that people talk about India and not least Tim Cook being a market of a tremendous promise, but that promise hasn't yet been delivered. We're probably, a good few years behind where China is right now, and the price sensitivity in India, as you sort of intimated, is incredibly high. So right now, if they're looking for their immediate earnings, China is a far more important market for them. Now, clearly, Apple is making slow inroads into India. It is gradually expanding production there. But, Apple's been in China making iPhones since day one, since 2007. They have a huge ecosystem of suppliers there which just don't exist in India. So there will be gradually more leanings towards India. We're kind of expecting that. But right now, China is the market that really matters.
Well, Qualcomm came out yesterday and said China was a bright spot. And one thing we heard from the CEO yesterday was that they have not seen signs of weakness in the Android premium market in China. How big of a harbinger of bad news is that for Apple?
Yeah, I think the real opposition they're seeing in China is from brands like Xiaomi and, of course, perhaps to a lesser extent, but also Huawei. These are companies that basically run their handsets on variations of Android. The therefore comments from Qualcomm suggest that, yeah, those sales are doing better. We kind of know this already from some of the estimates, not least out of IDC, market share gains globally in the order of 30% from Xiaomi in particular, taking chunks out of Apple, where this is really kind of a reflection of a growing sense of patriotism towards what devices you are buying. Again, you're probably seeing that a little bit in the EV market as well.
Well, Alex, that's what all of this, I think, points to, the fact that the demand is there, but they have a brand issue in China. How do you fix that?
It's really challenging, but don't forget that this has happened to Apple before, right? In 2016, 2017, there was a similar resurgence in patriotism. Apple saw big chunks taken out of its market share. In fact, we saw Samsung around that time almost completely leave the Chinese market, and they did a huge pivot to India. I think now what most people recognize is the biggest cell phone factory in the world, or certainly smartphone factory in the world, is in India. It's a Samsung factory. So maybe it's just a question of patience, right? That, of course, they have to keep innovating. They have to ensure that the market perceives them as having one of, if not the best smartphones on the market, but it may just be a matter of patience. Try to ride this out and hope that in 3 or 4 years' time, they're back to growth.
The stock is down by 12% year to date. Alex, you know the numbers. I think there is one big reason that makes it very difficult to bet against this name this year. What did they unveil in September? There are so many of us, including myself, Lisa, Anne-Marie, who quite simply haven't upgraded frequently. Is that going to change come September?
Look, we'll have to be watching what our colleague Mark Gurman reports. He's the sort of sine qua non on reporting this stuff. The thing is with iPhones right now is we're not really expecting significant hardware jumps. It's really hard to find those big innovations anymore. There are a few things that people would like to see, maybe a foldable display. I don't think we're going to see that this year. It's really in the software that people are paying attention, and that's why that's why the conversation is around AI. That is what consumers are increasingly looking for. It is also a way of generating more services revenue, depending on what those business models look like. So we're used to now a model where you've kind of refresh every 3 years, maybe every 4 years, but then they try to eke more services revenue out of you, more sort of recurring spend, which is on the whole higher margin. And that's how, even as iPhone sales decline, they're somehow able to prop up revenue and, of course, profit.
Alex, thank you, buddy. Alex Webb there, out of London. That stock is higher by 1% in the pre-market. You look very smug.
Well, I'm not
Is that
smug.
because you've upgraded?
No, I didn't upgrade. I mean, I broke my phone, so then I had to get a new one. It's not really reason
So
to
you
be
got a new
smug.
one. Okay.
But no, it's not
Cool.
a status symbol anymore. Remember when it was a status symbol to have the newest thing and have more cameras so that you could have a better... Yeah, and now it's not. So that sort of raises a question. If it's just the software, it's not about showing people, you know, I have this.
Are you saying it's no longer a status symbol because everyone else has one? It's become too popular.
At least we're not having a 6S. Poor John.
Well,
John Stolfer say
he
6S.
has the capability to buy another one. I think that this is sort of...
He's just refusing to upgrade.
Exactly.
Tony Sacconaghi of Bernstein in the last week saying sound the fear. Sound the fear around this name. One of the reasons, and I mentioned it, come September, if you come out with something, a big upgrade, you mentioned the words, the letters, AI, does that get people to upgrade? Because we've had Dan Ives of Wedbush sitting here for the last 2 years saying there is this big stack of individuals that have these old iPhones that are ready to go. This big super cycle's coming. I'm still waiting.
If John Stolfus is the example, he goes home and he fights robots that call him. I'm guessing he's not going to necessarily go buy a phone because it has AI.
Fighting robots that call him. That's all I'm thinking of now. Okay. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hakez. You're on form. Hey, Yahara.
Hi, John. Bloomberg is reporting Chinese telecom giant Huawei is secretly funding cutting-edge research at American universities through an independent Washington-based foundation. Documents and sources saying Huawei is the sole funder of a research competition that has awarded millions of dollars and attracts hundreds of proposals from scientists, including those at top U.S. universities that have banned their researchers from working with the company. Huawei is currently blacklisted by the U.S. Commerce Department. Unsealed DOJ documents show that Alphabet paid Apple $20 billion in 2022 to keep Google as the default search engine in the Safari browser. That deal is the focus of the DOJ's antitrust case against the two tech giants. Regulators alleging Google has illegally monopolized the market for online search and related advertising. Both firms had hoped to shield the total payout from being made public. The DOJ and Google will offer closing arguments today and tomorrow, with a decision expected later this year. And Tesla is making more cost cuts, this time with its interns. The EV maker is rescinding summer internship offers just weeks before students were set to begin. This coming as Tesla undergoes massive job cuts and sees a handful of executives leave the company. Revoking internship offers is unlikely to save Tesla much money, though, with Glassdoor showing interns typically make $18 to $28 an hour there. That's your Bloomberg Brief. John?
Yahara, thank you. I find that story really, really sad. These are arguably highly qualified individuals that may have had 2, 3, some of them might have had more offers than that, and chose to go somewhere, probably to go and work for Elon Musk at a place like Tesla, and find out weeks before the internship starts that the job's not there anymore.
You know, as to the why, maybe it's because the top human resources executive just left from the company. Please turn off the lights when you leave.
But it's not a tremendous amount of money, but potentially it's a short-sighted because it could be a huge talent pool down the line.
I hope potentially there's a rethink of that decision. I find that absolutely dreadful.
The only problem is who's going to manage them. If there isn't anybody left.
Yeah, I hear you. I hear you. That's the latest on Tesla. Up next on the program, no hint of a hike.
The whole game plan is basically unchanged. No hint whatsoever of a rate hike. No hint that it's not going to work. You know, he basically said, we've got it.
A conversation up next. Andrew Hoddenhorst of Citi on why he thinks, never mind hints of hikes, he thinks we get 4 cuts this year.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Equity futures on the S&P 500 positive here by 0.7%, just about session highs. Yields are lower by 2 basis points, 460 on a US 10-year. Under surveillance this morning, no hint of a hike.
The whole game plan is basically unchanged. We're going to keep rates here until we're highly confident that we're going to get inflation down to 2%. No hint whatsoever of a rate hike. No hint that it's not going to work. So market reaction, I think, was pretty appropriate given what he said. He basically said, we've got it.
We get it. Here's the latest this morning. The Fed keeping rates unchanged, citing hotter than expected inflation. Chair Jay Powell saying the next move is not likely to be a hike, but avoided offering a timeline for rate cuts. Andrew Honhorst of Citi offers us one. We maintain our base case for 100 basis points of cuts in 24, substantially more than priced by interest rate markets. Andrew's with us around a table. Andrew, hello. Let's go straight to it. 4 cuts in 24. This is not consensus. Where does it come from?
Well, the Fed's going to cut this year. I think that was very clear from Chair Powell yesterday that at least the next move is a cut. And the way that they get there is because the inflation data is going to give them the opportunity. I don't think it's going to 2%, but it's going to be slow enough that it lets them cut. And then the labor market is going to weaken. And we heard that from Chair Powell, this idea that we're seeing that the trend is really towards a weaker labor market here.
I think this is your signature call for this year. It's the weakness that you're anticipating in the labor market. Do you see it now? Where's it coming from?
This is really important because what we heard from Chair Powell is with the 2 mandates, the dual mandates in better balance in their words. So inflation has come down. It's not at 2%, but it's come down. They're looking at employment now. And when you look at employment, Chair Powell highlighted some of these things. You look at the conference board. Do people see jobs plentiful or do people see jobs hard to get? They're seeing jobs as harder to get. You ask people, are you more worried about keeping your job? They are more worried. We see that in the New York Fed survey. And then you go to the NFIB small business survey. It's going to come out today at 1 p.m. Let's see where it is. But you're seeing small businesses that are saying they're not excited about hiring. So all of these indicators are going in one direction.
At the same time, we've been seeing signs of cracks for a really long time. People expected things to weaken substantially earlier this year. They haven't. Late last year, they didn't. So at what point do you have conviction this time is different?
So I think a lot of those calls were maybe not wrong, but just very premature, and the cycle has just extended a lot longer than many people thought. And what we were going through in the labor market was a kind of normalization. We had job openings that were extremely elevated. We had just incredible need to hire people and restaff. And we've really worked through a lot of that now. When we look at these trends, take the quit rate in yesterday's JOLTS report. That's at a decade low. And what that's telling us is that this isn't just normalization at this point. This is people that, at least in the last 10 years, people have not been this worried about holding on to a job.
Which really raises an interesting question about tomorrow's non-farm payrolls report. We're talking about how high numbers will be and how high numbers have been, and it really is one of the reasons why people say this is a robust labor market. Are you saying that those numbers inaccurately represent the true labor market and are distorted by immigration, by other types of features that really might mask a real level of weakness That could catch us sooner than many people think.
I think that's right. And one of the great things about being a U.S. economist is we have an incredible range of data to draw on, especially with something like the labor market. So the biggest focus is usually, right, that establishment survey, non-farm payrolls, those have been strong. If you look at almost any other labor market indicator, they range from slightly weaker than that to a lot weaker than that. Take the household survey, that's where the unemployment rate comes from. The unemployment rate has been moving up because employment in the household survey has been softer. Take the business employment dynamics survey. Now, this is something most people don't watch. It comes out very, very lagged. The numbers just came out from Q3. 9 million firms that are accounted for in this. This is really the official data on what firms were doing in Q3. If you look at that data, we lost jobs in the third quarter. I'm not saying that actually happened, but you look at all these different data points, you kind of plot them all together and try to figure out where the trend is. That trend is towards a weaker job market.
Let's take a look at the hard landing versus soft landing chart. We'll do that together. I'll do it in the air for you. It's been a long night, okay? So soft landing here. All right, hard landing over here, soft landing, immaculate disinflation, big supply side recovery, et cetera, et cetera. Sounds like you're somewhere over here. Is that fair? You're looking for something close to a hard landing this year?
That's fair, and I think that markets have actually moved away from this soft landing idea. It's pretty clear from the inflation data that we're not getting the soft landing. If activity holds up, then maybe we're going to have more of an issue with inflation. The reason I think that the Fed's going to see enough to cut is because that's right, we're more towards that hard landing end of the spectrum.
So when you look at market pricing, and this has echoes of a conversation we had with Gershon Distenfeld of AllianceBernstein in the last week, do you see the pricing of, say, one rate cut this year as just a weighted average of a whole range of possibilities and maybe not the most likely outcome?
That's right. Markets are always going to average over all the possibilities. And you heard Chair Powell, it was kind of this multiverse of possible Fed outcomes yesterday. They could not cut at all. They could be cutting. I think what's important is the asymmetry of the Fed's reaction function. You don't need both softer inflation and a weaker labor market. You just need one or the other, and that's why they're going to cut.
It's fascinating to me that you said we're not getting a soft landing. You expect 100 basis points of Fed rate cuts. Is that basically you saying that you think the damage will be done enough that even 100 basis points of rate cuts won't be able to give that sort of surge of stimulus into the economy soon enough to stave off a real downturn?
This is what happens in almost every monetary policy cycle, and I don't think that there's good reason to think that this cycle is going to be different. We have inflation that's run higher than expected, still higher than expected even in the first quarter. That has kept policy rates higher for longer. We're in the higher for longer stage of the policy cycle. The next stage of the policy cycle is a weakening of the labor market. Once it starts gradually weakening, it then weakens more sharply. I think that's exactly what's playing out now.
Just quickly, how united is that committee on the FOMC?
I think there are a lot of different views around the table right now, and I think Powell is probably something of a master in terms of somehow bringing things enough together to do that press conference yesterday.
Andrew Honhorst of Citi, I just get the feeling, Bramo, that he's very much on the dovish end of the spectrum on that FOMC.
Well, there's a lot of diversity.
Yeah, apparently,
about,
I know.
You know, gender, race.
I find that so weird that he responded in that way. We were talking about groupthink. That was what the question was about in the news conference, the risk of groupthink and the lack of dissent on the FOMC for the last several years. And he starts talking about gender diversity on the FOMC as if that should imply they don't have groupthink at the Federal Reserve.
He's a smart man. He didn't want to answer. Period, full stop. And that's, I think, the awkwardness that you were talking about.
I was waiting for him to talk about diversity of thought. So I was taken aback when he did this U-turn, pivot.
Yeah, we all were.
Lots of pivots.
It was a long news conference. I mean, based on how the show has started today, I mean, like, you can misspeak. Coming up next on the program, second hour of Bloomberg Surveillance, Seema Shah of Principal Asset Management, Stephen Ingender of Standard Chartered, Moderna CEO Stefan Bancel, and SocGen Sabaja Rajappa from New York. This is Bloomberg.
October of 2019, you surprised the business world by stepping down as the CEO of SAP, a very, very large company whose value had more than doubled during your co-CEO position and CEO position. And you took a position with a much smaller, less known company, ServiceNow. Usually people, when they leave a job, they go to a bigger company. Why did you go to a smaller company?
Well, I saw the future and where it was going. First of all, I want to say I had a great run at SAP, and it was a pleasure taking them from 39 billion to 163 and really inspiring lots of people and customers, and it was a wonderful experience. But after 17 years, nearly 10 as CEO, I was ready to do something different. And when I saw ServiceNow in the marketplace, I knew what it was, and I knew what it could do. And I knew with my background, I was a pretty good cultural fit for what ServiceNow needed to scale it.
So let me ask you, what does ServiceNow really do? Tell me in simple English language that everybody can understand. What do they actually do?
40% of the CEOs say today, if I don't digitize my operations, my company will no longer be viable in less than a decade. So we were the IT backbone for companies all over the world. How do they manage their assets, run their operations, secure their operations, all things digital having to do with IT.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.